Na makofi tena kwa KRA. You know, when she said, we are really working hard to serve you, hamku clap sana. Hii kukua makofi ya kilo. But we are trying. We are really trying to serve our clients. We are trying to be there for you and to make sure that we make tax compliance as simple and as seamless as possible. Just a few housekeeping before I call our keynote speaker. The washrooms, when you go outside, they are on the right. So if you need to use the washroom, you can go there on the right, and there are ladies at the entrance who will be able to direct you just in case you need anything else. Okay, my name is Mpida Munguti. I'm your MC for today, moderator, and our program is going to be, it's displayed on the screen. It's going to be a short one. We'll have the keynote address just right now, and then after that we'll have Ms. Hakamba, and then we will have a Q&A session. Now, as Mrs. Hakamba is speaking, you can be writing down your questions so that then she can answer at the end of that session. Madam Dr. Lilian Nyawanda, karibu sana for your keynote address.
Thank you. I'm sure, I don't know how many saw our celebrations for KRA at 30. Or anyone aware that we have hit 30 years as KRA? Okay. Okay, so we hit 30 years this year since the establishment of KRA, because KRA was established in 1995. So we've been having, various activities just to mark that milestone. And one of the things we are doing is we are really getting into a new phase where we are becoming more customer-centric, focusing on ensuring that our taxpayers, our partners, have a good, conducive environment for paying taxes, for doing businesses, and we just want you to focus on your core. If it's business, whatever you're doing, focus on your core, but also be compliant. And we want to make the process and the cost of compliance as smooth and as simple as possible. So we are really excited to have you here. And please relax and feel at home. We are, I know for some of us, I don't know how many have come to KRA for the first time today. You've never been to this building. Oh, great. There's one there, 2, 3. Okay, several. Okay. I hope you feel okay in here. The reception. I normally say KRA officers are just human beings like you. We are also taxpayers. We pay taxes. We feel the same pain you feel when you're paying your taxes. But we've got a job to do, and we have to support the nation and the government. No government can run without taxes. Yes. So please feel welcomed here, and let's have a good session to celebrate and engage, ask questions, listen in to the different speakers who will be coming in. Feel free to ask questions. During tea break, let's engage. Let's look for our different KRA officers. I think at some point we'll ask that they identify themselves, so that if you have those personal questions you want to ask, you can follow through, and we'll provide mechanisms to do that. Okay? Okay, so let me go to my speech now. Ladies and gentlemen, good morning. It is my pleasure to join you today at this important event, the Fireside Chat, that brings us together to discuss how we can create a conducive business environment for our women in manufacturing sector. At KRA, we believe in continuous dialogue because it helps us better understand your unique needs and co-create solutions that ease compliance burdens while enhancing business competitiveness. Forums like this are invaluable. They align our shared goals and build a tax system where you're not just compliant, but empowered to thrive. Allow me to therefore sincerely thank the Kenya Association of Manufacturers for partnering with the KRA to provide this significant platform. Through this forum, we'll be able to identify challenges, share ideas, and provide solutions aimed at supporting the industrious women of our nation. Ladies and gentlemen, today we gather not only to reflect, but to engage on both opportunities and challenges faced available by women in manufacturing, and I dare to say men also. We are here to deliberate on ways to strengthen men and women's participation in one of the pillars of our economy, manufacturing. Allow me once again to commend CAM, this time for establishing the Women in Manufacturing program. This initiative will indeed bolster the local manufacturing sector, which is in dire need of expertise, innovation, and talent. By equipping, educating, mentoring, and building networks for women, this program will provide the necessary skills to take our industry to new heights. Ladies and gentlemen, our nation's manufacturing sector is reinventing and empowering women, and it's absolutely critical to the future of this industry. The representation of women in this emerging market force has grown significantly, and it's imperative that they receive full support to actively participate in Kenya's development journey. As a tax administration, the Kenya Revenue Authority remains committed to advancing women's economic empowerment for prosperity. We are simplifying tax processes, facilitating trade, creating a level playing field to ensure fair competition, and helping women to uphold tax compliance. To this end, we have a variety of initiatives for sensitizing our stakeholders and building their capacity in trade, empowering them economically. Additionally, KRA has established a new micro and small taxpayers department that focuses on MSMEs, with special attention to women entrepreneurs. The success of the manufacturing sector depends on increasing competitiveness, building capability, and enhancing connectedness, all of which contribute to our nations and the benefits of compliance among some manufacturers. While many business owners see paying taxes as a patriotic duty, others perceive taxation as a burden rather than a vital tool for national development. To address this, KRA has intensified its tax education and outreach programs nationwide. We are simplifying tax processes, deploying user-friendly digital...
Because you just needed to simply submit your return. So over time, we knew that we had to modernize, we knew that we had to move with the times, and that's why the first focus was really on the business systems, to just make sure that the business systems are actually addressing the needs of our taxpayers. So that's when the journey for reforms and modernization happened. And you're able to see that slowly we started with automating, as simple as PIN registration, return filing. Over time, we came up with the integrated systems, and now we had systems that were actually addressing specific areas of operation. So the next thing that we really needed to address was efficiency. So it was both on KRA side to be more efficient in how we do things, to have an automated back office system for both customs and domestic taxes. And then later now, as we move along, we can see that we have supporting systems, and I think if you go to the first slide, that are supporting basically the core systems to be able to meet the objective of efficiency as we speak about it. Some of these supporting systems, for example, in manufacturing, you'd be talking about the accessible goods management system, really our track and trace system that is helping us with not only making sure that we are more efficient in revenue administration, but it is also streamlining the controls around production and, yes, tax declaration. On a broader perspective, it is also supporting controls around counterfeit, so that you make sure that when you're in production, you're able to be able to get your worth in return on investment as a way of, for example, when you look at the excise stamps, so that when we are very sure that the production that has been done by yourselves, if you talk about maybe soft drinks or hard drinks, then they are recognized as valid production, and therefore at the point of sale, you're able to authenticate that yes, you're actually complying to tax standards, and yes, you're able to move your products, so to speak, by complying to tax requirements. What we have displayed right now is just an example of some of the integrations that we have, and you can see that if we narrow down now to domestic taxes, you can be able to see that our focus is the iTax system. So when you talk about, for example, the EGMS, the Accessible Goods Management System, and we talk about the tax invoice management system, everything converges onto iTax. And this is because for you, if you need to access any of our systems, your interface or where you go to is iTax. You need to file your return, your information is in iTax. You need to register, your information is in iTax, or you need to put your information in iTax. You need to apply for a refund, which you'll hear Madam Wanja taking us through it. Then you need to log into iTax. We have also provided solutions that help you be able to see how your tax outlook through iTax looks like. So in the past 2 months, for example, if you log into iTax when you want to file any of your returns, if you are VAT registered, you'll be able to see the dashboard. That dashboard is really telling you that you have sold, you have bought, and therefore, as we progress this month, this is the March tax that you probably are going to declare. Should you have a disagreement, or maybe you're having some conflict with your records, then it is the period of time within the tax period, within which you need to correct whatever that may have gone wrong, so that by the end of that tax period, you actually make your accurate tax declarations. Now, our systems are available continuously. That's why you can be able to file your return even during the weekend. You can use any devices. I'm seeing some of you with laptops. For some who are really small, especially for the micro and small enterprises, you can even use your phone. You can use USSD, for example, to be able to register and file and pay and make payments. Now, you'll be able to see that during this presentation, I will focus more on eTIMS. The reason being the questions that were forwarded by yourselves were heavily leaning on eTIMS, and therefore I thought I need to focus on eTIMS. And then during the Q&A, if should there be something that we probably need to address more, then I hope that it will be brought forward to the floor. So on eTIMS, when we talk about what is eTIMS, if you go to the next slide, I'll start from the note. It is not a tax. So it is not a tax. It's normally a clarification that we need to make. Sorry. I think this will help. The only thing that I'll be able to confirm if I'm looking at the presentation from my phone, so I'll be able to confirm if you're all moving together. So it is not a tax. It is basically the system. It's a software, basically, that helps you generate your invoices electronically. So in the course of your business, you basically are already generating invoices with or without eTIMS. But then, you remember earlier, we talked about our journey of efficiency and simplification. So to make it easier for your information to actually feed into your respective returns, then eTIMS is actually a software, a free software that is provided by KRA that will help you in generating your tax invoices, have that information available in your tax systems, and basically make it easier for you to comply with tax requirements. When you look at the objective of eTIMS, the next slide, most important, I've mentioned, minimizing the cost of compliance, but then also simplifying the tax filing processes. I've mentioned that. Many times when we're implementing systems, many people ask us, what is in it for us? Sometimes it does seem, because our focus as KRA is really revenue mobilization, but then we also have to look at how do we more efficiently, even as we collect revenue from yourselves, we make it as seamless as possible so that you are able to actually have more time to do your business and, of course, pay more tax. But for you, what we are looking at really is to make sure that our processes are as efficient as possible. From our end, mobilizing revenue, of course, expanding the tax base, making sure that the business of operating environment, this is of benefit to you also, is level so that everyone pays their share of taxes. But to do that, we have also provided within eTIMS, you'll be able to see flexible solutions so that we all have options that can work for our specific circumstances in business. Our key successes, if we go to the next slide, would be, of course, we've been able to expand our tax base because of visibility, the visibility that we have as a result of implementing eTIMS. We're able to have more people within the tax base. We're able to have simplified solutions out there. I've seen that we've continuously tried to develop as simple solutions as possible. You'll be able to see in forward slides herein. But we've tried to simplify as much as possible. Your phone, you can invoice through your phone. If you don't have a smartphone, you can use even what we call kabambe to raise your invoice. If you can't invoice for yourself, we have solutions that help you to be able to still invoice even when you are limited when it comes to digital exposure, for example, or actual literacy. We have enhanced tax compliance management as a result because of the data, again, that is available to us. And this is an area that right now is really advancing to make sure that now we use the information that is available to us to better do our compliance management processes. And lastly, maybe increasing of VAT collection, resulting in a growth in the collection that we have for VAT. The legal framework that we have around eTIMS, what is required, all of us. How many are on board eTIMS? I didn't want to ask how many are not on board eTIMS. So we all need to be on board. So for those who are not on board, we all need to be on board, and that's what the law says. And in the event your turnover is below 5 million annual turnover, then what is required of you now as a manufacturer, maybe, if you're able to generate your invoice on behalf of that farmer, for example, that fisherman that you're getting your produce from, then the law has enabled you to actually do that through our solutions that are available. Again, we have a buyer-initiated solution and a reverse invoicing solution, and this is also covered in law. The other provision that we have is recognition of the tax invoice as the valid document for purposes of filing your tax return. Tax invoicing does not only cover generated goods, so to speak. It's not that when you're only selling 16% goods is when you need to raise a tax invoice. Even if you sell tomatoes at Marikiti, for example, you actually are supposed to be on board eTIMS. This may be exempt, but for purposes of eTIMS, all of us, if we have business income, we need to raise our tax invoices. There's, of course, a few provisions for exclusions or exemptions to this provision. For example, if you do business around financial services, for withholding tax transactions, interest, I've talked about financial services, then when you go to section 23 of the Tax Procedures Act, you'll be able to see the whole list, but there are very few exemptions. Otherwise, anyone with business income is supposed to transact in eTIMS. The solutions, when you go to the next slide, when you look at the solutions that are available, there are some that are device-based. We first rolled out TIMS. Some of you are using TIMS. How many are using TIMS? Yes, so there are a few people. So that's a system that is actually available. If you have that device, the ATR device, you're generating your invoices through the device, we consider you compliant. But we have the online portal. How many are using it? Yes, so you can see, if the ones who are not onboarded, you can see for any solution I'm mentioning, there's someone who knows about it. But basically this one, you don't need to have a specific device that you're using, for example, a phone or a tablet. You just need credentials from KRA. You can log in anywhere. If you're having your phone that day, If you have your tablet that day, if you have your computer that day, you have the KRA credentials, you log in, generate your invoice. We have this invoice available to us on real-time basis. But we have a downloadable software. We call it the eTIMS client. How many are using? So in this forum, no one. So you can download also. You can give you directions on how to download that software on your phone, or on your computer. The details of how to go about it, the guidelines are actually on the KRA website. You can have that installed on your phone or computer. You can do a system-to-system integration. You have an ERP. You have a QuickBooks solution. You can actually do the direct integration with us. And lastly, or not lastly, simplified solutions. We have solutions on the eCitizen platform. So when you go there renewing your driving license, you are maybe applying for your passport, going somewhere, you can also generate a tax invoice there. And you can also raise your invoice, I said, through USSD. It's *222#. The latest solutions that we are working on, we have the buyer-initiated invoicing. It's available on the eCitizen platform, and it's live. Now, the thing about this is, if the person who you are doing business with has raised an invoice for you, you have an obligation to actually confirm that that transaction actually happened. You can do it on USSD, but then you can also do it on the eCitizen platform. There's a form of buyer-initiated solution, now the reverse invoicing solution, where we integrate with your system. Anytime these transactions are happening, we get both your transaction and the person who you are doing business with from your system. So you update your requirements so that you're able to give us both your information, both the buyer and the seller. That way, again, we have visibility of such transactions. A good example is people who have systems that have the transactions for the farmer being accounted for. The coffee industry, tea industry, sugar industry, those are good candidates. Taxi hailing cabs, you saw the other time Uber had a notice out. It's something that we are working on to enhance so that we're able to pick some of this information directly from the systems we are working with. I'm hoping I'm through the hard part. Now, can go to the next slide. Yes, I'm through the hard part. So the eTIMS invoice, if you look at the requirements, basically it is just a digital receipt. We talked about it. But I want to focus on what information you need to look at on your tax invoice. If you go to the supermarket right now, any supermarket in Nairobi, you already are getting an eTIMS invoice. So these are details that you already are familiar with. You've seen a QR code? Yes, the QR code is a KRA feature. So you can actually use your phone to scan to make sure that that tax invoice is valid. You can see the control unit serial number. That you can also check through our website to confirm that it's integrated with KRA. You can see a control unit invoice number. It's a unique number that is generated again by KRA for purposes of making sure that these invoices that are being generated are unique, and from KRA perspective, they are not being duplicated. It's good for you to see the PIN of seller, because that way you're able to confirm that they're onboarded on eTIMS. Again, on the PIN checker, you can be able to see that, whether or not they are eTIMS compliant. For purposes of your business, when you're doing business with another person and you are VAT registered and you need to claim input tax, the thing that you can do is, when you're buying, especially your stock from these people, you can actually run it through the PIN checker. It will show you whether this person is registered on eTIMS or not. The other details, I think, from your questions, the issue of item codes, that came up. Now, to be able to identify how you've classified your items, whether they are 16%, 0 rated, exempt, then we have the item codes that you need to utilize. The item code that you will use will determine whether that good is categorized in any of these categories. If you don't use the right one, then you might find, when it comes to description of your supply, you might find that you may have a miss, and this will go all the way to your returns, and have incorrect data in the return. So it is important that, one, when you're giving the description of your supply, don't just tell us taxable goods. You need to use the right code so that we correctly classify what you do, and that will go a long way in being able to support yourself when you're doing your tax declarations, but also support the other people who you do business with. So the key features that you need to look at when you are verifying: scan the QR code. If, for example, you have limitations on this, we have an invoice number checker. When you're going to iTax, just before you log into iTax, on that page we have all the checkers, and one of them is the invoice number checker. So we have enhancements that are ongoing in this space. I've mentioned about the simplified solutions, so I won't go to that anymore. But when you're registering on eTIMS, for those who are here, you don't need to come to our offices for approval. It's an auto-approval process that is being done right now. The same with if you need to move from one solution to the other, again, you do it through the system. Unless you have complexities, you don't have to come to our offices. If one day you wake up, you're using the online solution, you're using the online solution, and then maybe it's not working very well, but you find the eCitizen solution is working, you can move. You can use whichever solution that is available. Previously, we were confining you to the solution that you registered for, but now not anymore. So we are allowing you to have multiple solutions. Ukisikia siku hiyo, you're going to install the software on your laptop and generate invoices from your laptop. You can as well do it. We can be able to see you from the system, but we are making it easier for you to interact with our systems. The other thing that is being simplified is the system-to-system integration. Oh, sorry. Yes, just having a customer management module on the online portal, again, that was missing the last time. So again, you can keep a register of the customers you're doing business with through your system, your solution, especially the online portal. That's where the enhancement has been, so that anytime you have to deal with these people, you don't have to start registering them afresh. So the other developments that are ongoing is, next slide, the implementation of the eTIMS solution for the fuel sector. Again, this is work that is ongoing currently. We are hoping that by December, we'll have all the petrol stations using the special eTIMS solution. We know we all pass by a petrol station in one way or the other. And when you compare to when you pass through a supermarket, even if you buy chewing gum at a supermarket, you'll be given that receipt. Sindio? But then it's not the same for the the fuel sector. The feedback that we received that we are working on is that it has been complex, especially at rush hour, especially the ones which are close to business areas. When we have so many clients coming at the same time, then the coordination between the fueling, invoicing, payment then becomes lengthy, and most of the clients, including ourselves, we are always in a hurry to just leave. So instead of having that scenario where we are not able to serve our customers, remember efficiency. So we are working on efficiency to have an automated system that when you fuel at the pump, automatically the invoice is generated. That's all that we are doing. So some who have petrol stations may have onboarded previously, but then because it is not efficient, then they are not able to comply seamlessly. So this solution is really to help them be able to comply better. We talked about the by-initiated solution, but we'll be able to see more of that. And then the auto-populated return, VAT return. How many are VAT registered? Yes, thank you. So I think that those are the most hands I've seen today. So for the VAT registered taxpayers, they are already experiencing this. It's a functionality that we intend to move also to the income tax returns, so that we simplify all tax returns through the use of technology. So you've seen how these systems are actually facing each other and how they have an impact on how the processes are running on other systems. We've talked about the fuel solution, so I won't talk about it much. I said it's automatic. We started rolling out with a directive from 1st July, but then we are hoping by end of this year, we'll actually have completed this rollout and we'll be experiencing fully how this works. The next slide. We talked about the by-initiated invoicing and reverse invoicing solutions. Really, these are meant to support the smaller taxpayers. So if you're already onboarded, that's good. If you go to the market, you have a restaurant, and you need to buy your supplies, and you need to account for your expenses because the law demands that you do that, then you can actually use these solutions for purposes of doing that. What they do is give us visibility and traceability of business transactions. Next slide. So in this current financial year, what we have started working on really is to interface technology with our relationship management framework. When we are doing taxpayer education sessions, when we are doing training, we are trying to really focus on what are the pain areas, which taxpayers are experiencing, which challenges, so that we deal specifically with those taxpayers. We deal specifically with the sectors that have a unique problem, so that we basically move along to improving, again, our processes rather than having a blanket presentation for everyone. So we are being focused in that way. We are trying to use the data to validate when you come to, for example, the auto-populated return, to give you the support that you need to be able to do your returns in a more accurate way. For compliance risk management, yes, we are working on our risk profiling to use data to be able to profile which cases should go to for compliance management or for audit. Through transparency and trust, trying to have fraud detection mechanisms so that the relevant enforcement teams can be able to take up cases where there's rampant fraud or tax evasion for purposes of enforcement. We are really collaborating with various partners, and you'll be able to see that as part of our advancement, again, in technology, we are also rolling out an enterprise API gateway. What is happening is that we are partnering with third-party software providers to be able to, we are availing our KRA services through technologies, and then the third-party software providers can be able to do solutions that will better support you, the solutions, enhanced solutions that will be able to support you better for tax compliance services purposes. When it comes to Kenya Association of Manufacturing and such associations, we have continuously partnered. We always have a tracking mechanism. Sorry, I forgot to mention, in my team, I'm accompanied by Caroline Washuka and Mudhoni Arimi. They can raise their hands. Why I've mentioned that, you can raise your hand again. Yeah, thank you. So Caroline deals with CAM issues, basically. So when issues come up, she's the one who looks at what solutions or what resolutions or what responses can we give. She's the one who tracks that. So we try to do that as much as possible to make sure that we have addressed your issues and you're able to continue with your business. One of your questions that came up was what opportunities we are seeing for integrating eTIMS with API, with AI. I'd like to just state it here that this is actually a journey that we have begun. We have started with the chatbot, so a support system. And very shortly, because it's in testing, you'll be able to see the WhatsApp bot. It has started for all KRA services, but specifically for eTIMS, you'll be able to raise your queries through the bot. You'll be able to raise invoices. For other services, you'll actually be guided on whichever service that you need, so that you don't have to, we have said, to keep coming to KRA to be able to be supported by the same thing that AI can actually do. The other thing that is a work in progress is use of machine learning for purposes of data analytics, being able to identify suspicious transactions, tax evasion, to be able to have forecasts, to do predictive analysis, to be able to identify compliance trends and what these have as far as policy impacts are concerned. So what is the other areas that actually we need to explore is to be able to see how we can streamline invoice reconciliation, refunds, compliance checks through the use of AI, and also confirming or enhancing data security, having the cyber security mechanism that are able to identify if we have unusual access or if we have fraud risks that need to be addressed. So it's a journey that we have begun. Taking us back to the beginning of this presentation, we are moving along with advancement of technology. We know, even in the manufacturing sector, you have advanced technology that you use for your processes, and therefore we don't want to be the stumbling block or what stops you from advancing in some areas, for example, accounting for your revenue, because we are being left behind. So as we continue advancing, don't get surprised that we keep saying, oh, KRA has this solution. We're just responding to the area, the environment that we're operating in, and the environment is actually largely technology. So to bring us to the end of this presentation, this is the most important slide. Our most important, our services are free. They're free. It's quiet. I'm confirming they're free. So they're free and they're accessible from all KRA tax offices. In the event you find they're not free, then we have areas where you can report that Hakamba lied. They are not free. We have the iWhistle where you can anonymously report incidences of integrity or corruption anonymously. We have the Complaints Information Center again, the CIC email. And then we also have numbers you can call to report incidences that actually outline to the contrary. So with that, I'd like to bring my presentation to an end. Thank you.
Asante sana, madam. Yes, you can sit. I told you, we have experts. Si mmesikia akiongea about eTIMS ni kama, she knows her stuff at the back of her hand. Ms. Hakamba has 23 years experience in tax administration. That's how important you are. We brought in the bigwigs. And she has been instrumental in advancing KRA's automation agenda through initiatives such as iTax, alianzia huko iTax, eTIMS, and taxation of the digital economy. Okay, and she's now in charge of the eTIMS operations office. So she's the right person to talk to you about eTIMS. I know it's a monster right now because it is new. Is there another microphone somewhere else? It is new. So it looks like a big, big monster. But we are going to slay this monster. Sindio? And we are going to understand it. So we are going to be having questions. This is the Q&A session. So feel free. If you have a question, you can raise your hand. Just raise your hand wherever you are. Okay. We can start with the gentleman. So when you take the microphone, please tell us your name. And then you ask your question. Be precise.
Yeah, my name is Bwana Mosomi. I come from Homalaimu in Kisumu County. Now I have some concerns regarding the remittance of withholding tax and withholding VATs. Now, when you look at the Finance Act that was passed, we are required to submit withholding tax and withholding VAT 5 days after paying somebody. Now, for example, when you go to the iTax Excel sheet, the withholding tax that is supposed to be paid there is supposed to be once the income of somebody has exceeded 24,000 shillings per month. Now, when you look at that Excel sheet, it contradicts the very law that was passed in that how do you analyze the payment per month and then the issue of 5 days after paying somebody? Because there are people who are paid on people are paid on a daily basis. For example, in companies that have multiple contracts, you can have people from Monday to Friday, you're paying people daily. And then how do you analyze that in respect to the 24,000 that is given on the Excel sheet? There's a contradiction between the law and the Excel sheet that is being given. Another issue is issues like government agencies, where you have people like Kenya Power who don't act on the withholding VAT certificates. How do you deal with it in respect to electricity disconnections? And at the same time, how do you deal with your system delay in sending certificates to suppliers? If you have something like a telephone bill that is supposed to be settled and you're supposed to deduct withholding VAT, and there is a deadline on that, how do you deal? And for example, people like Kenya Power nowadays have advanced. They don't need to come to disconnect electricity. They can do it from where they are. They have put some machineries. So that is the part which I'm really concerned about for now. Thank you.
Okay, asante sana. You had a question?
Okay, my name is Boniface Rono. I'm coming from Agroscope Africa Limited. Permit me to appreciate Hamada for the very, very insightful presentation on matters eTIMS. Mine is to talk into an issue, speak to an issue on matters policy and regulatory framework, because I'm coming from a seed company which is regulated by Kenya Plant Inspectorate Service, that is KPIS, as well as KRA on matters tax. Now, my question is, there is the 6 months policy for filing returns from the KRA, and you also have a 9 months policy that is regulated from KPIS for a distributor or stockist to stock a seed on the shelves. Now, the big challenge that we're facing as a seed industry is on matters market returns, because at times you sell a product to the customer, and the customer is permitted by KPIS to have that product on the shelf for a period of 9 months. Now, when this return happens, beyond the 6 months period, we are not expected to claim VAT from it because it's already in contravention with the 6 months policy that we have with the KRA. Now, how do we ensure harmony between the 6 months period from KRA and the 9 months period from KPIS, that is Kenya Plant Inspectorate Service? I think if we can address that, it can help us a lot on the seed industry. Thank you so much.
Okay, asante sana Boniface.
Okay, thank you very much, and good morning, everybody. And a very big thank you to Madame Hakamba for that very insightful presentation on eTIMS. My name is Jacinta, and I have the opportunity of being both sides of the divide. I'm a former member of staff, and now I'm in the private sector, so I'm happy to be here. Now, I have a few questions that I've picked out from the presentation. One is the element of legality. From my understanding of what KRA is, it shouldn't be intrusive. All right? So I'm feeling from this presentation that now KRA is really getting into people's businesses. When she talked about the buyer and the seller, that KRA should have access to the information of the buyer and also from the sales side. I'm just trying to ask myself, what part, is that a provision, or is that just the big brother mentality of KRA? I think that needs to be addressed. And then secondly, what I feel, if I choose to opt out of eTIMS and go to eCitizen, what is the element of duplication there? Because if you find that as an authority, you're making so much of an investment in these mega systems, and then people opt out, right? And then they prefer to use something that is a lot more friendly. What's the implication on that, on the authority? And especially as far as data is concerned. I don't know whether I've phrased my question correctly. And then we go to the fuel system, where now you want to get into the fuel pumps. In the macroeconomic environment, people are now moving to EVs, isn't it? Yeah, the cars that will be charged. So you'll be making, again, a very mega investment at the pumps, but what is happening is that we are moving towards a greener ecosystem. So I don't know whether that has been factored in. All right, that's just another question. Then now, I just feel, and maybe this will be addressed by the person that will be contributing something in customs, I feel KRA should be making the business environment more friendly, right? Currently, people are complaining that the economy is tough. KRA, I feel, has an obligation to make things easy for people, but I'm not getting that impression so far. So, yeah, the women in manufacturing are the game changers. They're the people who are doing value addition and so that there's a lot generated within the economy. Jobs are generated, money is generated. But with the intensity of regulation, will that happen? Will we find the economy growing or constricting as we continue to make it more intense in terms of, you know, the focus? So I don't know. This is just, I think it's just observations and maybe something that perhaps can be addressed. Thank you very much.
Thank you, Jacinta. Next to Jacinta.
Hi, my name is Jennifer Dara, and I'm the founder of Tea and Company, and we focus on value addition for tea. I wanted to hear more about the integration of QuickBooks to eTIMS, because I wasn't aware of that, and that's something that we could benefit from, and that KRA should put out, because currently we have to do like double invoicing to make sure everything stays in both our systems.
Thank you, Jennifer. Please.
Hello, my name is Hyven. I work with African Originals. So, first off, thank you very much for the presentation. I do have the first comment. So when it comes to policy and regulations, so you will find there's an update on the Act, like excise regulation changed on the 27th of December 2024. And then there was a way we were supposed to file our excise, and the deadline was the 5th. And now you have like around 5 days to work on that. And you even go to the KRA offices, they are not aware. The regulations are still with the policy team. The eTIMS, the iTax portal in terms of filing is not updated, and we're already running late. Now you have to be in the KRA office for 1 week, Monday to Friday, trying to find someone. So please, when any regulations is passed on, please just update all the system concurrently as you do that to avoid the delays. Then, during the presentation on eTIMS, there was a comment about expenses. For you to recognize expenses for your income tax, they need to have gone through the eTIMS. Now, do we have a provision for non-resident consultants working in Kenya? So these are guys who are using their passports, they don't have a KRA PIN, they don't have alien ID, they're just here for like 3 to 6 months, and they're working. So of course we do withhold for the services we get from them, but the invoices they're giving us is not an eTIMS invoice, of course, and that's a very huge cost. That is now what that is all about. Then I do get, so for us we have an ERP with an ETR system kind of, and then we do the invoices. Now, if you scan the QR code in our tax invoice, immediately after invoicing, it hasn't signed. You need to wait up to the next day for you to confirm whether that invoice has actually gone through or not. Now, that can't be real time. So I can't stop paying someone or doing a service for someone just because it's not signing and you need to give a provision of that amount of time. So I don't know if it's because maybe there's so many invoices happening or something like that, but it takes so much time for it to sign. Then I don't know whether this session is going to touch on excise. I just have one. So we just got a few regulations on how to deal with expiries and disposal. Now, if anybody can just mention something about it, it's all about how we need to have, how the stamps was activated for you to be able to claim back excise. What if you would wish to forego? It's just too much work, especially if you're getting so much from all over.
Thank you. I think we can respond to those ones first. Madam?
Yeah, I had one before you respond.
Okay.
Yeah, I'm here. I'm here.
Oh, okay.
Yes.
Your name?
Yeah, my name is Maxwell from Patco Industries Limited, a manufacturing company of confectionaries. Now, you've in saying that the system needs to be to make work easier in filing VAT. That is clear. But then we've got a problem while filing the VAT itself. We supply both the 16% and the zero rated because of the exports. But when you check on the portal, the auto-populated return does not pick the exports completely. So the sales on iTax is always lower than whatever we are supposed to report while filing returns. So thank God KRA will allow you to increase but not decrease the sales, otherwise we'll have a problem. So that's one question. Then question number two, on eTIMS, on claiming the expenses. We've had a case of KRA against a company in regards to outsourced services, that VAT is supposed to be charged on the full amount. What is the position of KRA? As it is, of course, it's on the commission part, but there is a case, of course, ongoing. KRA trying to come up with the reasoning that the full amount, even the reimbursable that is being paid to contract employees, needs VAT on it. So can we get clarity on that? Do we need VAT on the commission itself, or do we need the VAT on the full invoice if the invoice is not being separated as commission and the reimbursable part? Thank you.
Asante Maxwell. Madam?
Thank you. There are some questions. We have a session after tea, and my colleague, Madam Wanja, will be covering. And that would be the question on excise and withholding tax. I hope it's okay, because she was going to touch on that. So I will talk about the Boniface from Agriscope. I didn't see where you are sitting, sorry. Sorry. Okay, yeah. So what maybe I can say about your question, what you're asking about is the regulations, especially KFIS versus KRA. So the provision for you claiming import tax is 6 months in KRA, but the provision by the seed regulator is 9 months to have them on the shelf. So I think maybe it comes to business alignment. It's the same thing with also the retail entities, where the goods or the supplies they have expiry dates. Bread might be a few days. So would you overstock and you know that probably you're going to have a lot of stock that you have to get rid of? And I feel like seed, also you have the limit because of its effectiveness with time. So probably maybe a bit of business realignment so that you don't also stock to the extent that you're not able to sell, because in that case then you make a purchase, but then the law here says that you need to claim input tax within 6 months. And the same thing, when you're selling, by the way, maybe a clarification, you need to declare that sale within that tax period. It's not 6 months. It's within the same month, except for claiming input tax, for credit notes, raising any adjustments, it's 6 months. So we'd be looking at how you're going to align your business so that you limit losses, or you limit the areas where you have stock actually you have to get rid of because it cannot be sold. I don't know if it's clear. For Jacinta, the issue of legality, that for you to make tax declarations, you have to actually maintain clear records, accurate records of your sales and purchases. When you're filing, for example, your income tax return, sales and purchases, it's not just sales. So when you're filing your income tax return, for example, you see, especially if you're in business, we take a whole lot of details from you. The profit and loss account, for example, the balance sheet is there, just to make sure that at the end of it, how does KRA ascertain that you have made the correct tax declaration? So that comes from the records that are actually availed to us, and it has been provided for in law that you actually maintain those records. The only thing that we are doing is that before, we would require you to bring the boxes and boxes of sales records. You know very well how that was going. Some people were bringing a pickup of invoices. No one can go through invoices in a pickup. So that's why we are asking, just transmit them automatically, and then we pick the information that we need for purposes of tax. But then we have limits because we are only supposed to use that information for tax purposes. That's all. That's all. So it's not so much intrusion rather than making it efficient for you to actually comply to the requirements that are in Section 54 of the Income Tax Act. The issue of the fuel pump solution, you are right. In fact, when we started rolling out, we actually talked about it because I think we had a session in a building where in the parking area, they had the EV charging ports. And as we walked in, we were saying that we were like, we're moving to fuel, and yet people are moving to electric vehicles. But rest assured, it's something that we also have taken note of. And it's an area that basically, because we already have mechanism for charging or accounting for such, for example, KPLC. So if we have mechanisms for accounting for such goods or supplies, then it's something that we just need to see how we can extend it now to such provisions. So it's actually something that we are aware of. Rest assured, we are actually trying to make the business environment, I think my friend here, Chao, she said she's directing it to you, so I leave it to you. But the business environment is informed by the larger macroeconomic environment. The most that we can do is making it easier is really making it more efficient on our end. We may not have full control of what's happening in our environment. Yes, it is increasingly becoming hard, but it's because of, again, our own circumstances. Are we in debt? Yes, we are in debt. Do we need to raise the revenue? Yes, we need to raise the revenue. Okay, do we need to have all our taxpayers queuing in Thames Towers as in addition to the paying they have to pay taxes, then they have to stand in the sun? No, we don't. We can't do that. So we can do what we can in our own respective spaces. For Jennifer, I think she's next to you. Yeah, QuickBooks. I think after this you can talk to my colleague Caroline. She'll be able to tell you how to get the specifications. But yes, we do integrate with the QuickBooks, and you should not have the double reporting mechanisms because, again, if our enforcement team finds you in that space, it might not go so well. So you can just talk to Caroline and see how you can integrate your system because we have provisions for that. For changes in law, I don't know. Yes, incorporating change. I agree with you. I don't know where the question came from. Yes, I agree with you that anytime there are changes in law, we shouldn't take so much time. We've been trying to narrow down that space to make the changes in the system so that you're just pacing, trying to see if now the return is compliant. I agree with you, and I think it's a point to note. It's an area we've also noted that. However, I don't think we've been able to be spot on because remember, when the budget is read, it's in June, mid-June, but most of the clauses are effective 1st July. So the window sometimes is a bit small, but we'll be trying to see how best to address this so that we don't have that window where the systems have not yet aligned. But I agree with you, you have a good point. For non-residents, for expenses, for non-residents consultants, raised that? Yes, oh, it's you also, sorry. So for this one, you remember I talked about exclusions. So for imported services, they're excluded from generating a tax invoice. The other thing is for the taxpayers in the digital tax economy, so the ones who are registered, they may have PIN. So for imported services, first of all, they're excluded. Now, there are some who are registered. They're actually registered, they have PIN, but the likes of, for example, Facebook, yes, we have them in our tax base, Facebook, Netflix, but for purposes of raising their tax invoices, they do not have to give us an electronic tax invoice. They are also, through regulation, they are also excluded. So you need to look at what exemptions we have, and then you need to know that for income tax purposes, you can actually use that to claim your expenses. You're able to do that. That's okay. So the excise, I think Wanja will take it. For PATCO, yes. So you mentioned that exports are not fully aligned to eTIMS, so to speak. Actually, before they were, but we had to relax some validations. So yes, for the time being, yes, you can increase your sales, but it's an area also we are working on. If we bring back the validations, we need to do it in the proper way, and that's the work that is ongoing. That's why we had to relax it for now. But the good thing is that in the return, you actually, the first point of reference is that it's a self-declaration. So if you partially, for example, transmit your invoices, and this is to the entire team, but then when you're filing your return, you come and find you have invoices worth 100,000, but then you really made sales of 1 million. It is your obligation to declare the 1 million so that you align to the QR code. I was keeping it, that sometimes you find when you are given an invoice, on the same day you find the QR code is not scanning, maybe that person has not transmitted. So the provision we have in law is 24 hours. Within 24 hours, everyone should be able to have transmitted their invoices. Now, that's a slight problem. So we have real-time and near real-time. If you look at our online portal, it's actually real-time, but it's near real-time to factor in some circumstances. Don't we all wake up, sometimes we don't have internet? Yeah, sometimes you find the connectivity, fiber, imekatwa, you don't have internet. So we're giving you a provision for some of our solutions. You can actually have offline capability. We don't want to interrupt your business. So continue generating invoices. Once you have the connectivity, transmit to them. So you'll find sometimes you buy something from someone, but then within a certain period of time, they have not transmitted. It should not exceed 24 hours. It should not. So if it's exceeding, it's something that you need to start checking, because within the tax period, you need to continuously check that you can be able to claim input tax on for all your invoices for purchases. And when you're filing your return, we also give you a window between the 1st to 20th of the next month to make such adjustments. In the event that person delays in transmission, you need to follow up so that you can be able to claim your input tax. But it should be 24 hours. So it's real-time or near real-time. Raise issues if you need to, so that you can be able to have all your invoices in order when you're filing your return. I think those would be my responses. Thank you.
Kindly allow me to ask one question, which my colleague from PATCO has just mentioned. Taxation of outsourced company invoices. The breakdown of the invoice is purely reimbursables, salaries, returns to NSSF and the like, the other statutory bodies. But KRA is insisting we tax on the whole amount. Yet the only income those companies make is the management fee. That, in my opinion, is double taxation. And if I'm to do that, I'm passing that cost back to to the same companies. I don't know what is KRA position on that.
I forgot to answer that, but you mentioned it's a case that is ongoing. I'd think that I think we let it run the whole journey up to the end. But then, for the time being, maybe what I can mention is that when you are looking at whether a service or a supply is taxable or not, we look at it from the point one, you see what kind of contract does this person have. So if you have a contract where it's between you and another person, and then VAT is chargeable, then the VAT should actually be on the entire invoice. Now, at the bottom of your chain or your supply chain, you might actually decide to outsource it. Then you deal with it accordingly with the other parties that are in your space. But granted, if a contract is between two people, one selling to the other person, that invoice should actually be 100% with VAT, and the entire invoice should have an eTIMS invoice. Then it depends on what kind of arrangement you have. If the contract, for example, puts it that you are providing such a service, let's say management, another person is taking the contractor bit of it, then it needs to be treated accordingly depending on the various parties. You know what will happen? If some parties are not visible in that contract, and then you partially invoice for that, maybe the management aspect, then we lose revenue downstream because we can't see who are the other parties in these contracts and have they actually accounted for the VAT. So I think it's a bit complex. It's not one shoe fits all. It depends on what kind of contract you're dealing with and who should pay what. What service are they offering? Is it a commission or what? How are you accounting for revenue? It's not a one shoe fits all.
I need to ask on the transmission of the purchases, the VAT. Probably get an invoice, you've made some purchase, you scan, you realize that it is transmitted, and even at the point of filing, it auto-populates and the records are there. But when you're uploading the schedule, you realize that the PIN is rejected, not only the PIN is not eligible for VAT input deduction. So what exactly happens on that one? And then the other concern is probably on the VAT schedule, the special table, whereby one maybe wanted to understand when one is under the special table, and then you've submitted all the records that you've been asked to submit in the station. How long should it take for one to be removed from the special table? Because you realize it takes so long until when the time you're removed from the special table, some of the invoices that you need to the input invoices, you can't claim it because of the 6 months period. Thank you.
Okay, thank you. So for the second bit, I believe, Wanja, were you covering the VAT special table? She was going to cover. So the first one, about the auto-populated, that you've captured PIN, but then when you're uploading the CSVs, it's saying that PIN is not registered for VAT. It's just what it is. I'm not registered for VAT myself, but I might go to maybe a restaurant, and in the process of them raising an invoice, they capture my PIN. But remember, I'm not VAT registered. I do not need to claim input tax. So the time when you'll be uploading such CSVs, it will actually send that message, because ideally for my transaction, my PIN should not be captured. We have incidences where the PIN is captured for one reason or the other, but then there are controls around the return such that such PINs do not make it to the return, because I'm not going to file my return, therefore I'm not going to claim input tax. The other thing that probably might happen is if you're VAT registered and you don't provide your PIN, or your PIN the PIN you provided is not correct, then you'll find that at the point where you're filing your return, even if you can see your invoice has PIN captured, if you don't give the correct PIN, it will actually not pick, because we can't identify that PIN with someone who is registered for VAT. So it is important that we stick to the rules. When you stick to the rules, then you find the returns will be working as more seamlessly as possible. But in the event none of this, I'm saying, is happening, that you're VAT registered but your PIN is being rejected, that's something that you can bring to us, because it's an inconsistency, so that you can be able to analyze and address it so that you claim your input tax.
Yeah. Good morning, everyone. My name is Vivian from Crystalline Salt Limited. I have some issues with iTax system. We've been having a lot of inconsistencies when it comes to information. The major one is on withholding tax PRNs. So we've had challenges, not just one company, like 3 companies within our organization. when we generate withholding tax PRNs and cancel the PRNs because of some issues, wrong declaration of the amount or payment date, we get penalties during that same day. So this is something that we've been following up with KRA, because every time we cancel any PRN because of erroneous declaration, we get a penalty and interest. And the result is we'll always get demand notices for those amounts. So when we follow up with our debt department because of demand notices, we have been sharing all the information, but they are not able to solve the issue. Because you see, it is reflecting on our ledger that we have penalties and debts. But to us, the moment we get those errors of cancellation, we speak to our relationship managers the same day. We give a narration of the sequence of events and the reasons and requesting them to correct the errors on our ledger. But this has been a very serious issue for us because they are not able to solve it. Debt departments have also not been able to solve it. I've gone there, we've sat with them like 2 hours, they've not been able to solve it. So that is one of the issues. The second issue is that we've also noticed from our system that there's inconsistencies in information that we are getting from iTax. You'll find our ledger doesn't show any penalties or debt, but we get a demand notice that we have a debt. And this is majorly on income tax, withholding taxes. So it is something that I would also like to bring to your attention so that you can be able to help us address it. Thank you.
Okay, thank you. And sorry about that. The only thing is you've taken the right approach, approaching your tax service office for issue resolution. And since this is actually, I believe it's a specific case unless it's affecting many, then you can bring forward your details to our secretariat so that we pick it up as part of the issues that you're tracking. We check what really is the problem and see how you can be facilitated. So maybe you can see our team after that so that you pick your details. Okay, thank you.
Yes, thank you very much, Madam Hakamba. I think most of the questions have been responded to. The rest will be responded to by the next speaker. After the tea break, we are going to have Madam Wanja and Madam Chow to give a present. Madam Wanja is going to present on tax compliance processes and filing challenges, as well as tax incentives, waivers, and refunds. And Madam Chow is going to give a presentation on customs and border control compliance. So do not worry, your questions will all be answered. Sawa sawa. Now, today is a good day. We said that earlier. Because when you come to KRA, unakuja na shida. Leo umekuja shida zako zitatuliwe, na utapata kikombe cha chai. And like a small biting. Si ndio? Ndio tupate nguvu for the next 2 sessions, right? So I will ask the ladies who accompanied Madam Hakamba, please stand up. Please, I want, yes, we have the 2 ladies, Carol and Modoni. When you're taking tea out there and you have additional questions, you can approach them and ask any other questions that you may have. Do we have any other members of staff who have accompanied our senior managers to respond to questions? Okay, those 2. So I hope you've marked them. Yes, so that as you're taking your tea, you can ask them the questions. Okay. So now we can break for tea for about 20 minutes. We will call you to come back. So drink your tea a little bit fast. Yeah? The tea is blessed. Karibuni sana.
ushuru tunaoulipa. Tumeboresha maendeleo kiuchumi na kijamii, ni kwa sababu ya ushuru tunaoulipa. Tumeimarisha biashara nchini, ni kwa sababu ya ushuru tunaoulipa. Tumeongeza nafasi za ajira, ni kwa sababu ya ushuru tunaoulipa. Tumeimarisha udhabiti wa kifedha, ni kwa sababu ya ushuru tunaoulipa. Tumeboresha maendeleo kiuchumi na kijamii, ni kwa sababu ya ushuru tunaoulipa. Huduma sasa zimekuwa bora na haraka, tunajivunia huduma bora. Huduma sasa zimekuwa bora na haraka, tunajitahidi kuijenga Kenya. Teknolojia imerahisisha huduma zetu, tunajivunia huduma bora. Taarifa zote zinapatikana kwa mtandao, tunajitahidi kuijenga Kenya. Huduma za iTIMS, ni huduma bora, tunajitahidi kuijenga Kenya. Huduma za ICMS, ni huduma bora, tunajitahidi kuijenga Kenya. Tunasherehekea miaka 30 kushirikiana tukijenga Kenya. Tunasherehekea miaka 30 ya kuwawezesha wananchi kote Kenya. ushuru, ni wajibu wetu sote. Tulipe ushuru, tuijenge Kenya. Tulipa ushuru, ni kujenga nchi yetu. Tulipe ushuru, na tujitegemee. Tulipa ushuru, ni ishara ya uzalendo Kenya. Tulipe ushuru, tuijenge Kenya. Tulipa ushuru, ni msingi wa maendeleo. Tulipe ushuru, na tujitegemee. Tunasherehekea miaka 30 kushirikiana tukijenga Kenya. Tunasherehekea miaka 30 ya kuwawezesha wananchi kote Kenya. Kukusanya ushuru wetu ni kazi yake. Forodha na mipaka Kenya, kuwezesha biashara zetu Kenya, kuelimisha walipa ushuru Kenya, kutekeleza sheria na kuishauri serikali ya Kenya kuhusu sera za mapato. Shule za imarika, hospitali za jengwa, ni kwa sababu ya ushuru tunaoulipa. Barabara zetu na reli zaboreshwa, ni kwa sababu ya ushuru tunaoulipa. Tumepunguza umaskini nchini, ni kwa sababu ya ushuru tunaoulipa. Tumeboresha maendeleo ya uchumi na kijamii, ni kwa sababu ya ushuru tunaoulipa. Tumeimarisha biashara nchini, ni kwa sababu ya ushuru tunaoulipa. Tumeongeza nafasi za ajira, ni kwa sababu ya ushuru tunaoulipa. Tumeimarisha udhabiti wa kifedha, ni kwa sababu ya ushuru tunaoulipa. Tumeboresha maendeleo ya uchumi na kijamii, ni kwa sababu ya ushuru tunaoulipa. Huduma sasa zimekuwa bora na haraka. Tunajivunia huduma bora. Huduma sasa zimekuwa bora na haraka. Tunajitahidi kuitenga Kenya. Teknolojia imerahisisha huduma zetu. Tunajivunia huduma bora. Taarifa zote zinapatikana kwa mtandao. Tunajitahidi kuitenga Kenya. Huduma za iTIMS na Invoice ni huduma bora. Tunajitahidi kuitenga Kenya. Huduma za ICMS ni huduma bora. Tunajitahidi kuitenga Kenya. Tunasherehekea miaka 30 kushirikiana tukijenga Kenya. Tunasherehekea miaka 30.
With regional integration growing, small-scale cross-border trade has seen a substantial rise and in turn, more border crossing. Small-scale cross-border traders can now declare their goods swiftly through the KRA e-Customs app. The app enables quick declaration and tax computation before reaching the border through its pre-arrival submissions of simplified documentation uploaded for compliance. For pre-arrival declaration submission, traders input the goods description, quantity, country of origin, and total value of the goods, which is capped at 2,000 USD. The app verifies the declared value against predefined trade limits to ensure eligibility for simplified clearance. Users can upload a simplified certificate of origin from the East African Community, that is the EAC, or Common Market for Eastern and Southern Africa, that is COMESA, for preferential trade treatment. Automated computation of taxes is based on HS codes assigned to goods, and traders may upload key supporting documents such as invoices, PIN certificates, and weighbridge tickets where applicable. The system flags declarations exceeding the USD 2,000
is also a tax expert with practical experience of 15 years at KRA. She holds a master's degree in business administration finance from KU and is also passionate about financial literacy. And not only that, she's also an author. She has written 2 books. Nabado. Yeah, so Madam Wanja has, I'm sure most of you know her because she was in taxpayer education for the longest time. Yeah? So I'm sure she's familiar to you. And as we said earlier, she is an expert. Leo, we have brought the big wigs. Karibu sana, Madam Wanja.
Okay, so my name is Wanja, and before I start, our colleague from Excise would like to address us just for a minute because he's heading to another meeting. Kilwa, please come and tell us something small about activation of the excise stamps.
Good morning, everyone. My name is Kirwa, and there was a question from one of you who asked, what happens when you've activated your stamps, your products are in the warehouse, and then they expire. So how do you go about it? This is how you go about it. You will notify the commissioner via your TSO. Thereafter, the TSO will come for a verification exercise. Now that there will be no taxes to be paid for that very product that has expired. Now, once the verification has been done, they will contact EGMS and the enforcement team so that we can conduct a destruction. Okay? So once the destruction has been done, that is it. Now, ile pesa ya stamps zenye zimedestroyiwa nayo, unfortunately, there will be no complimentary order for that. Okay? Yes.
Thank you. I hope now, oh, a question to you. Just give her mic so that she gets it clarified.
Okay. What you've answered is on activated stamps that haven't been paid excise on, which means the EGMS can sort that out. Now, as a follow-up to that, in our iTax, okay, if the KRA were to do for you an audit, they would expect that all those stamps were sold or either in your closing stock. What documentation does EGMS give the taxpayer in order for them to support that these goods were actually destructed? What do we get for that? Then my question was, on product that had been sold, excise was paid, then they came back. How do you go about that? So what you've answered is the first part of if it is in your warehouse and it expires. What about you had already paid excise on it? So now there's like double cost on it. So there's a stamp payment, which of course will forgo. What about the excise duty already paid on it?
Now, this is what happens. Let's say after destruction, when the EGMS team, the enforcement team, and our service provider go for destruction, there is a destruction certificate that is issued by the service provider to you guys to ascertain that a destruction has been done. So if an audit is to take place, and then that document will suffice. All right? Now, second question. If you sold your products, excise was paid, and then let's say the person whom you sold to let's say, return the products as expired. Now you'll get in touch with your TSO, explain yourself on what happened, and then now the process will kickstart from there. They'll advise you on how to go about it. Okay.
We want to look into a few things in relation to the concerns that you had brought forth. But before then, is everyone having a phone number? A phone. Okay, kindly lift your phone up. Okay, go to star, do this, star 22, star 222 hash. Okay. Then let's go to KRA services. Are we there? KRA services. Okay. Then go to other. No, I want you to, move with me. Go to other. At the other, what is the first item appearing there? Okay, what's number 3? Number 3 is? Okay. Okay, oh yeah. So we have the PIN registration, turnover tax, monthly rental income tax. Whatever Hakaba was taking us through, you can actually see it here. But then we noted 40.7% of the people who visited our offices last month came in because of PIN retrieval. That is all I want us to solve now. So that 40.7% of the people will not be visiting our offices, but they'll have the solution at their desk. So now go to 98 more. Go to 98. 98. What's number 3 there after you go to 98? PIN retrieval, okay? Now proceed, retrieve your PIN. I just want to give you a minute and retrieve your PIN. It needs you to indicate you are a Kenyan, and then you put your ID number. If you're not a Kenyan, you say, and then it will ask for the number again. How many people have managed to retrieve their PIN numbers? Okay, put your hands up if you managed to retrieve your PIN number. Just 1, 2, 3, 4, 5. How many? 6. Okay. So I just wanted to start there to let us know that we are simplifying our services and looking into what are those services that bring people to our offices, because we are out to ensure we serve you from the comfort of your home or the comfort of your office. So now, any other time you need your PIN number, you don't need to lie to us, neither do you need to visit us. All you need to do is star 222 hash, and then KRA services, then you follow the others, and then you get your PIN number. Thank you. Okay, so now let's move to the business of the day. We will look into the pillars of tax compliance. We will look at the taxation of business income. You had asked about tax evasion and tax avoidance, tax incentives and exemptions. The refunds was a question that you had raised as well, and the offset of overpaid taxes. So the pillars of tax compliance. When we say that somebody is tax compliant, what we basically means that the person registered, not only did they register for PIN number, they also registered with the obligations they're required to be registered with. The second pillar is the filing of the returns. Once somebody gets the PIN and the tax obligation, the various tax obligations, there are those ones that are monthly and there are those ones that are annually. That's for the income tax. Then the filing of the return is required. In addition to that, the fourth pillar is the reporting to be complete, or you provide accurate information to determine the tax liability. And in most cases, when we are conducting the compliance checks and the audits, we are basically on pillar 3, where we are looking at, is the reporting that was done accurate, and was it correct? That's what we basically look into. And the fourth pillar is the paying of all amounts that are owing when due. And so if you do not meet then any of these obligations, then it will mean that you have not met the 4 pillars of tax compliance, and that would mean you're not compliant. You notice that the registering, the filing, the reporting, and the paying, we are currently handling all of them on the iTax platform. So the tax cycle then calls for you to register, to file the required returns, to pay the taxes, and after paying the taxes, to deal with any matters that is arising. That is in relation to refunds and all the other matters that would be there. So let's look at the taxation of business income. Now, a number of us, I mean, all of us here are in business. And because the session was ideally for the persons in business. And the nature of the trade that you are in, manufacture, adventure, concern, as long as the income that you are earning is not deemed to be income from employment, then it will be deemed to be income from business. And the laws in the country basically says that the income from that business is taxable in our country if the business is carried out wholly in Kenya, all partly in Kenya, and partly outside Kenya. So that business will actually be taxable in Kenya. And we have the 3 forms the business is conducted here. We have the sole proprietors, we have the partnerships, and the companies. In this case, the sole proprietor, we will end up using our PIN numbers to run the sole proprietor business, well as for the partnership and for the limited entities, we get the independent PIN numbers. Then when it goes to taxation, the tax regime would either be, if you are the small trader, you'll be in the turnover tax. And if your turnover is above 25 million, then you must be in income tax. But even if your turnover is below 25 million, you can opt to be in income tax as well. So when we talk about the taxation of the sole proprietorship, this is where we are saying that a sole proprietor may decide to be in the turnover tax or income tax, even for companies as well. And then the income, under the income, if you are sole proprietor and you are the income tax regime, then your income will be taxed on the individual graduated scale rates. And you will be required to file the annual returns. And the annual returns, as we speak right now, you need to file the year end for all individuals is 31st December. And we have the 6 months to file after that. So, like June this year was a deadline for the filing of last year's income tax returns. And we are encouraging all of us to file as early as possible, because when the year ends in December, then we have the 6 months. Now, in addition, if you're operating a sole proprietor and you have the employees, you'll be required to add the pay-as-you-earn obligation and deduct the tax accordingly. Again, for the value-added tax, if your turnover or your expected turnover in a year is 5 million or more, you're required to register. And you're dealing with fattable goods or services, you're required to register with a VAT obligation. And for VAT obligation, we file every month. That's what Hakaba was talked a lot about. eTIMS started purely for VAT before it was added to the other taxes. Now, taxation of partnerships. For partnerships, though a partnership has an independent PIN, the income from the partnership is a lot, or the tax payable will be paid by the individual partners. So the return for the partnership will be filed, yes, but after filing, the share of the profit will actually be distributed as per the profit and loss sharing ratios among the partners, and it's now the partners who will pay the taxes. So that means the income of the partnership is paid, the tax on it is paid by the individual partners, and it's taxed on the graduated scale rates. Again, when a partnership has employees, the partnership entity is required to add the pay-as-you-earn obligation. And in addition to that, if dealing with fattable goods and services and has attained the threshold for the VAT, which is 5 million, to add the VAT obligation. Now, for the turnover tax regime, there are those manufacturers among us who would like to be in the turnover tax regime. And for the turnover tax regime, it's for those persons whose turnover is between 1 million to 25 million in a year. And the turnover tax is at 1.5% of the gross sales. What is unique about the turnover tax? No expenses is claimable, unlike the income tax. Because at the income tax, you actually claim the allowable expenses. But at the turnover tax, that's why it's cheaper at 1.5%. You don't claim any expenses. Again, turnover tax, just like the VAT, the due date is the 20th of the following month. And there are few people who are exempted from turnover tax. And these are people with a business income that's above 25 million, people with rental income. If your income is management, professional, or training fee, and any income that's subject to a withholding tax, that's final. It's also exempted from turnover tax. Now, for the people who registers or operates as companies, or for the income tax annual regime, both for companies or for individual, the cardinal rule is one, that in determining the taxable, let's move to the next slide. Yeah, that in determining the taxable income, they are the expenses that we are allowed to claim. And one of the things that I want us now to note is that the expenses that we'll be allowed to claim are the ones that are eTIMS. That starts. So ensure that you are passing, or all your expenses, we are obtaining the eTIMS receipts. And the other thing is that if an expense is not wholly and exclusively incurred in the production of the income, it shall not be deducted. And I urge all people in business to read Section 15 and Section 16 of the Income Tax Act. Section 15 and Section 16, they both talk about the allowable expenses and the disallowable expenses. So that if you have an accountant, you can actually follow through and actually see if your expenses are being taken care of as they should be. And ideally, this is now the way the tax is computed. We take the sales revenue less the allowable expenses. We get the earnings before taxes, and then after that, we get the income before tax, less the tax. For the companies, the current rate is now 30%, and for individuals, it's at the graduated scale rate. And then after that, you get your net income. What I would like to note is about the installment taxes. So for the installment taxes, remember that for all individuals whose tax payable is 40,000 or more in a year, and for all corporates, the taxes should be paid in installments. So in the course of the year, not wait for the year to end. And then when the year ends, we are able to look at the whole taxes that we are supposed to pay in the course of the year, less the taxes that we paid in installments, and that is what we pay as the balance of tax. That's what we pay as the balance of tax. And then the filing of the annual returns, both for the companies and the individuals, is there as well. 6 months after the end of the accounting date is the due date. This is just a sample of how installment taxes is computed. A number of people usually ask about it. We basically take the previous year's tax liability and we glow it, and then after we glow that, we divide that by 4 so that we pay the 4 installments. And then come the end of the year, once we get the whole tax that we were supposed to pay for the year, we less the taxes that we paid as installment, and the balance is what we pay at that point. So here is just a summary, and we shall be able to give you these notes. You'll actually be able to see this. And note the penalties that are there for the late filing and late payment. And just on this note, there's somebody who had asked about waivers. And the question about waivers, the reason as to why we are saying it again and again for you to file and to pay the taxes as they fall due is because the clause that was there for waivers was actually done away with. What that means, today, if you incur penalties, interest, fines, there is no clause for waiver. And another person had asked, will we be bringing in another tax amnesty? I talked to policy unit before coming here, and they told me to tell you a categorical you got it. They told me to let you know, in the past, we have had like the 2 amnesties that were there, and they told me Treasury has indicated a categorical. You answered yourself. So in other words, let's ensure we file and pay, because we are not expecting an amnesty. So let's do what's required of us. And then some people had asked about tax avoidance and tax evasion. And tax avoidance is basically where we allege our tax affairs to reduce the tax liability by basically exploiting something that we see like it's a gap in the law. And it's legal, though it's unethical, and that's why we have a penalty for tax avoidance. And the penalty for tax avoidance is you actually pay double the amount of tax that you had avoided paying by handling the tax avoidance scheme that you were actually taking up. And in manufacturing, when I looked at it, I found two main tax avoidance that persons in manufacturing has been applying. The first one is of shifting profits to subsidiaries in low tax jurisdictions. And the other one is importing machinery at the incentive schemes beyond the intended scope. Those are the 2 main ones I actually found that people in manufacturing are doing. So we are basically saying, if you are in any of these, you have taken advantage of by paying lesser tax because of any of these 2 or among the others, we will require you to pay double the tax you could have paid if you did not take advantage of this. Then, on the other hand, tax evasion is fairly deliberate. Is where you avoid taxes, paying the taxes, and we already know about it. It's illegal, and there's an offense towards that as well. And the offense will mainly be penalties, interest, and even possible imprisonment. And the examples I noted for tax evasion in the manufacturing sector, the first one, and this one is major, it's big, I noted in most of the cases that audits have been done, was underreporting of sales revenue. Underreporting of sales revenue is a key thing in this sector. So declare your correct sales. Then the other one was overstating of costs of raw materials. That's another one that I found. Okay. So then about the incentives. A tax incentive is basically a measure that's in place that makes you have a favorable tax treatment of the business that you are actually conducting. And some of the tax incentives that are in place for the manufacturers include tax holidays. If you are operating in schemes that are allowing that, there is a tax holiday. Then we have the special zones. The special economic zones, the EPZs. EPZs are the ones that will mainly have the tax holidays. Even the special economic zones do have that as well. Then we have the investment allowances, the reduced tax rates, and then there's exemption from failures taxes. These are some of the tax incentives I picked for this sector. Now, let's look at some of these in detail. Capital allowances. Now, in manufacturing, there are some of the things that will be very basic, like building, the manufacturing, the building that you have for manufacturing. And we have the investment deduction allowance. For manufacturing building is actually 50% in the first year of usage and 25% of the residual value in equal installments. So you need to claim that when you are actually dealing with manufacturing. Then we have the wear and tear allowance on machinery. It's 50% in the first year of usage and 25% per annum on the residual value in equal installments. Also, I urge people who are in manufacturing to take advantage of the wear and tear allowances as well. We also have the industrial building deduction, which is 10% investment allowance annually in equal installments. Now, as you can see, these capital allowances, they're basically allowing you to recoup 100% of your initial capital cost. That's actually what's allowing you to do. So it's actually such a big incentive to the manufacturers. Then for the export promotion zones, there's an incentive on the VAT is related for exports. So if you're exporting, the VAT on it is zero-rated. For the special economic zones and the EPZs, they have a reduced corporate rate of tax. Like the people who assemble the motor vehicles locally, there's 15% for the first 5 years from the year of commencement for its operations. Then there's exemption from customs duty, excise duty, and VAT on imports for this. Then there's the VAT exemption on certain raw materials and inputs. For example, the inputs and raw materials used in the manufacture of passenger motor vehicles. So for your given sector, I would advise liaise with your account manager. How many people here know their account managers? If you know your account manager, liaise with your account manager. If you do not know the given incentives that you should be enjoying in your sector, so that you actually establish these. In fact, we encourage people to take advantage of the incentives because we are quick to come for our taxes. So we also advise you to take advantage of the incentives where you should. Now, somebody had asked about tax exemption. That's the other thing that I will talk about. Now, for persons with disability who are in receipt of an income, they are granted a tax exemption on their monthly or annual income if they have a valid exemption certificate. So if you have employees and those, there's that person you know is a person with disability, advise them to liaise first with the National Council of Persons Living with Disability. That's where the process starts. They'll be given a number there. There are a few checks that will be done there. And after those few checks are done there, the association will recommend that person for tax exemption. So the tax exemption basically says for the first 150,000 per month of that person's income is tax-free. Meaning, if a person is earning 200,000 and the person has a valid exemption certificate, they only pay tax on 50,000. That's basically what it means. Then there are materials, articles, and equipment that include motor vehicles that are modified or designed for the use by these persons as well, that are exempt from import duty, value-added tax, damage charges, port charges, and any other government levy which would be in any way increase their cost when they want to buy the motor vehicles. So that's another thing that if your employee does not know that they can actually get this advantage, let them know about it. Now, somebody had asked something to do with agriculture. That's why I brought in this slide. The special tax consideration for agriculture and smallholders suppliers. Now, these VAT exemptions and silolating, you notice that many agricultural inputs are VAT exempt or zero-rated. And this is basically to lower the production cost. Example, we have the seeds, the fertilizers, the pesticides, animal feeds. There are certain agricultural machinery and equipment. We have irrigation and greenhouse equipment. Yeah, those are some of the equipment that we are talking about. Then, farmers and agro processors benefit from investment deduction allowances. There's somebody who talked about the value adding. If it is in farming, then you actually qualify. And what you do, you actually qualify for the investment deduction allowance and the wear and tear allowances on the machinery, tractors, and the processing equipment that you have. Then we have import duty exemptions that apply to certain agricultural inputs and equipment that are not locally available, and this helps in reducing your cost as the farmers or the agribusiness people. So take advantage of that as well. Okay, VAT refund becomes the next thing that I will address. And I know, I've seen some people have even now changed the posture. Before I even talk about the VAT refunds, since I knew that you will come here and you'll have a concern about it, I asked two staff from the refunds unit to join me here. I have David and Modhoni. Just lift up your hand. David and Wamboi are from the refunds unit. And so, now that you came, do not leave before your refunds concerns are. Yes, they are here to handle you. Yes, yes, note that. Okay, so the VAT Act provides for VAT refunds, and the VAT refunds that it provides for is when the refund arises from excess input tax resulting from dealing in simulated suppliers, also where the excess input tax is resulting from withholding VAT, where the excess credit in respect of taxable supply that became simulated on from 1st July 2023, any VAT paid on bad debts, and inventory claim or tax paid prior to registration. So these are the 5 that the VAT refunds provides for. So, causes of delays in refunds. Actually, somebody had indicated that question. When we did a few checks, these are the 5 main causes that I found out. The first one is when we ask you to supply us with a certain document and you do not. So, can you imagine the way you tie our hands? You tie our hands because we want to clear your cases, but you have not provided us with the documents we have asked. Then, where the referred claim needs to be audited, that sometimes will delay a bit, but it takes us to process 90 days, irrespective of whether it requires an audit or not. We actually process within 90, oh, 120, yes. It used to be 90, now it's 120 days. Then, delays in debt validation process due to ledger inaccuracies, that's another cause. Then where there is an ongoing investigation or a pending court case, pending policy interpretation or pending TAT ruling in relation to that claimant, then that will make us hold. And finally, when we have finished doing our everything, and now we know we should refer you, but the money we were given was not enough. But there's a remedy for this. If a case is at this point where we are just remaining to disburse, that can be used to pay your other taxes. Yes. So if the case is at number 5 stage, then the refund amount we are required to pay you, you can use it to offset your other taxes. So, offset of overpaid tax. Application for offset of the overpaid tax shall be made within 5 years from the date on which the tax was overpaid. And taxpayers will not be able to claim for the offset of overpaid tax where another referred application for the same period is already in process. And then for taxpayers with liabilities, they'll be allowed to apply for the offset of the overpaid tax to enable them clear the outstanding liabilities. That's what we were talking about. Don't just stay saying it's fully processed, but I've not done that. Then upon application, the iTax system will generate an overpayment voucher, and the taxpayer can utilize the voucher to settle outstanding liabilities for the same obligation or other tax heads apart from pay-as-you-earn and withholding taxes. So note that. I remember, Miriam, when we were in Mombasa, this was a big issue last year. Yeah. Okay, so I've come to the end of my presentation, and now I know there are a few questions that came, there are some questions that came a bit late, so I was not able to include them in the presentation. But I came with a team of about 4. You have known 2, so 2 more. So I have Sheselem here from Policy. I have Pelis there from Taxpayer Experience. And maybe I would ask, do we handle the questions that were in the presentation now? No, we handle them after. So thank you so much. We will handle all your questions after the customs presentation is over. Thank you.
I know Wanja's presentation was the most important. Yeah, I know that's where most of the issues are. We thought it would be best to have all the presentations and then have the questions at the tail end so that now you can ask all the questions for both DTD and customs. So is that okay? That's okay, yeah? All right. Our next presenter, Madam Laura Chow. Chow is a Chief Manager in the Revenue Monitoring Division of Nairobi and other regions in Customs and Border Control. She has over 2 decades experience in KRA, having led major revenue recovery initiatives while at the Investigation and Enforcement Department, Musimuogope, and heading as well the Southern region and the container freight stations that we have in Mombasa. She has also been part of the teams that drove reforms initiatives like IBID, the online customs auction, and has worked in several multi-agency anti-fraud teams. She holds a BCom from the University of Nairobi and an MBA from the Strathmore Business School. Is a certified fraud examiner. Huwezi mdanganya. And she has also undertaken several executive senior leadership training, the latest being at the Harvard Business School. Hajamaliza kusoma. She's still enhancing her qualifications. So Madam Chow is here to talk to us about customs and border control compliance. Karibu.
Good afternoon. I think this was intentional so that we could draw out the women in this forum. I might look this small, but they really dug my CV. So the women in this forum, please do not shy away. This is your platform, even as we have invited the men amongst us. We want you to be out there. Tell us what's happening in your spaces. Most of you are in the manufacturing space, either as owners or working for manufacturers, and we as KRA are encouraging you to come out. We noticed as we were having our tea break that most of the first questions were by men. Did you notice that? And yet this is women in manufacturing. So challenge to the women. Please put yourself out. We have the platform. Thank you. So my presentation was on cross-border trade. The questions we got from CAM mainly touched on the trade that's done at our borders. I don't know if that was the only question, but that was the major question. So we noticed that that's a challenge for women, and especially women in manufacturing. But just to briefly tell us what customs is all about, Customs and Border Control is one of the departments in KRA that is headed by Dr. Lillian Nyawanda, who was with us earlier this morning. Our role is to enforce laws that govern the import and export business. We aim to reduce time and costs associated with the cross-border trade. We have really tried to automate that process, streamline documentary and border compliance requirements. So our aim is to ensure that there is smoother, faster movement of goods, enhance competitiveness, support economic growth, and making it easier and affordable to do business across the borders. We currently have 35 borders. I don't know if all of you know about them. 4 with the Uganda, that is Swam, Loahaha, Malaba, Busia. Some are OSBPs like Busia and Malaba. We have 7 on the Tanzanian border. Thank you. So we have 7. As we go to the next slide, we have 7 borders on our border stations on our Tanzanian side: Muhuru Bay, Isibania, Sand River Gate, Namanga, Loitoktok, Taveta, and Lungalunga. So we have all our customs officers on those borders. But just to come back and remind us of our role, our first role as Customs and Border Control is to collect revenue to support this country. And our target in customs, which I oversee, is about 1 trillion this year. So we have to ensure that business continues. We are here to encourage you to do trade, because as you trade, then we get our revenue. To facilitate legitimate trade through proper documentation. Most of our borders are porous, but we are encouraging most people to use the legit border posts. And we are here to facilitate and make it simpler for you. So border control and enforcement, that is mainly to just ensure that the porous borders are covered. And this we do with our multi-agency. Those are the police at the borders and other partner government agencies. We collect international trade statistics. This is not only at the border, but we collect all the information on importation, our major country of importation being China. So we collect that data and we advise government on how to carry out the budget process. We also negotiate and enforce international and regional agreements. These are, for example, the ESC. ESC is what do they call it? It's an agreement of countries, 7 countries, and it is set to ensure that we reduce the trade barriers, not the tariff barriers. So there's free movement of goods. I hope you're aware of this, that you can bring your goods from Uganda, Tanzania, and not pay taxes because it's a free trade area. We also have the COMESA. If you bring your goods from a COMESA region, which encourages smooth trade movement, it's also treated as a free trade area. And we have the big baby that I think Jacinta here is spearheading, the AFCFTA, the African, I think I wrote it down, African Continental Free Trade Area that is opening up the market to the whole of Africa. I hope you are aware of these trade agreements that are allowing you to access larger and greater markets. So I would go to what we consider as MSMEs here in customs. It's people who are transacting below 2,000. That's approximately 260,000. So this is a very small business people who are at our borders, and we still want them to grow. They bring in things from maybe Uganda or Tanzania, and they just do the small businesses across our borders. The vitenges, I think you've seen most of that coming in, yes. So we allow them to operate under simplified trade regime. The people who do trade above that follow the standard import and export procedure. I don't know if anyone is aware of what that means, so that I'm not the only one talking. Anyone? The ladies, I challenged you. Okay, as you go to the next slide, when you do the import-export, women are the biggest traders, the largest group of traders across the borders. So hence, because of all this, there's high cost of doing business and less market access. Imagine if that business was done by men. They're quite forthright, they know what they want, and they get it, they go for it. So this is a challenge to women. All the information is with us, and I think today we tried to show that there's a group, or there's a large group of women who are not knowledgeable in taxes. So feel free to please come to us and ask these questions. We appreciate that most of our borders are headed by male colleagues, but we are here to give you our contacts in case you feel uncomfortable on dealing with our male counterparts. We are here to help you as KRA. So we can go back and look at the other slide. Oh, so this is what Kenya, or let's say KRA, has done. We have built OSBPs. We have done cross-border trade reforms to simplify our processes and lower trade costs. We have partnered with micro, small, and medium enterprise authorities, and these are represented in all our borders or our stations. So there's information available. And we have also simplified the customs procedure for cross-border by coming up with an app that is simple. I think we'll play the video at the end. It's called eCustoms, that you can download in your mobile phone. Simply, it's very simple, and it can give you the steps on how you can do your own declaration without using a customs agent. Next. So what we have done on our side as KRA, We have set up call centers at the borders. We are now doing vigorous stakeholder engagement, sensitization. I think we have partnered with CAM, this being a good initiative to bring the women together. We are doing sensitizations and trainings. Some are online, some are physical in the different areas. Gender mainstreaming, we are acknowledging the women who are doing business and helping them on the right procedures. Not leaving out the men, but we know the women don't bring themselves forward. We are going for them and engaging them in different activities at the borders. Yeah, those are the things we've done. We are starting to also post female staff at the borders, the ones who are able, because our commissioner is very particular on gender mainstreaming. So the ones who have accepted the role, we are giving them time to work in our borders, which are quite far from the cities. We are also establishing gender desks and ensuring that these are manned by female staff. And of course, the regular engagements with women in our different border stations. I think that's the end. I want to play a small clip to show you the eCustoms mobile that we have come up with. It's going to be fully rolled out, but it's one of the apps that is used to do a simplified declaration when you're importing or when you're exporting your goods in and out of Kenya. It has many other you're at the airports, if you have felt harassed or you felt your bag has been, I don't know who, that was a major issue last year. I think we have resolved it. But who have felt antagonized at the airports? As we wait for the video to come in, please, with a show of hands. We also man the airports. Apart from the land borders, the airports and the seaports are under Commissioner Lilian Nyawanda. Who has been harassed? No one. Oh, so we have we have quite a good CV with this group. So one of the things we've done in that e-customs is doing passenger declaration forms where you declare your goods as you come into the country. And it's very clear to the customs officer that your goods should pass the green channel or the red channel. Anything beyond $2,500 is taxable, whether it's a mobile phone, I know that's the bone of contention, or whether it's alcohol. The Act gives us some quantities that you're allowed to carry in as you're coming into the country that are accessible. I think it would be 1.5 liters of wine. All those are stipulated in the Act. So this app also has that as one of the modules. It's not clear.
anywhere. Forget manual entries. Our system automates passenger declaration and assigns a unique QR code for quick scanning at customs, ensuring faster clearance. Stay updated in real time on our custom clearance status and channel allocation. To get started, download the app from the App Store or the Google Play Store. Sign up and create an account. Log in and enter your travel details. Ensure your details match your passport records to avoid delays. Where applicable, the app syncs with the electronic travel authorization system, autofilling necessary
Okay. Oh, we are good to go.
small-scale cross-border has seen a substantial rise and in turn, more border crossing. Small-scale cross-border traders can now declare their goods swiftly through the KRA e-Customs app. The app enables quick declaration and tax computation before reaching the border through its pre-arrival submissions of simplified documentation uploaded for compliance. For pre-arrival declaration submission, traders input the goods description, quantity, country of origin, and total value of the goods, which is capped at 2,000 USD. The app verifies the declared value against predefined trade limits to ensure eligibility for simplified clearance. Users can upload a simplified certificate of origin from the East African Community, that is the EAC, or Common Market for Eastern and Southern Africa, that is COMESA, for preferential trade treatment. Automated computation of taxes is based on HS codes assigned to goods, and traders may upload key supporting documents such as invoices, PIN certificates, and weighbridge tickets where applicable. The system flags declarations exceeding the USD 2,000 limit for customs intervention. The app generates an electronic slip, that is an e-slip, detailing applicable taxes and duties for payment, as traders can choose between mobile payment, card payment, or bank transfer. Instant payment confirmation is provided through the app notifications and downloadable receipts. Customs officers verify declarations and compare submitted details against physical inspections when necessary. Once approved, the system issues a digital release notification allowing traders to proceed to exit. If discrepancies are found, consult the customs desk for facilitation. Join us in shaping a seamless future. Download the app today and experience the difference. The KRA e-Customs app, bridging borders, boosting business. Simplified trade regime, fast, simple, seamless. With regional integration growing, small-scale cross-border trade has seen a substantial rise and
But just towards the end of the tax year, we had an issue. Actually, an officer asked us for money to be able to help us. So you people should know these are things that are going on in some of your offices, whereby someone is stuck, you need help, and someone tells you, I need 5,000 shillings. If you want us to be able to give you this, I need 5,000 shillings. Unfortunately, a number of these officers are very young, and I'm not against the young people, but I think maybe something needs to be done. Yeah, because I was shocked. Of course, I didn't give the money. We looked for someone else to be able to help us get around the system. Yeah, so I think it's a bit disappointing. For me, I think my best experience has been with Kisumu. Kisumu has been very good. Kisii used to be funny, but right now I think there's some change. Yeah. I don't want to say which other offices are there. But there is one particular office. It was brought to help the people because it wasn't there. But I think they need to change how they do their business. When I walk to KRA, I need help. I don't expect an officer to ask me for money. Yeah. The second thing has to do with this issue of special table. I was put on special table in April. This is because I do products I do gluten-free products, and I only use what we call the climate-friendly of the traditional African crops, finger millet, cassava, amaranth, and the such. I don't do wheat, I don't do maize. So I was put under zero rated because that is where those products fall. Of course, when VAT came, eTIMS, it is you guys who program us when you've given your products. So I think I got an email. Unfortunately, I registered the company when I was still working here in Nairobi. So my company is registered. My head office is still west of Nairobi. And what happened was I got an email asking me to explain why I'm having negative VAT, which I think is a claim. I wrote an email back because I didn't think I had to come all the way to Nairobi to explain myself. And for those who have called the KRA contact center, you know, you really need to be patient and have a lot of money for you to get a call going through. So this didn't work for me. I did an email, and I have an email trail of everything I'm saying here. Strangely enough, I still got a second prompt to come to Nairobi. I was paying both. I wasn't able to travel immediately. Came, I think I didn't get to the right office. The following office, I was late by a few hours, according to what I was told. And yeah, I found out I'd already been pushed there. I did the documentation. It is 3 months down the line. I'm still on special table. One of the supermarkets that I supply here, it has a presence countrywide, actually blocked my products last week because, you know, they can also now not be able to also claim what I supply to them. Yeah, that is how bad it is. It also means basically I'm being driven out of business. The people that are employed they'll also lose their jobs because when I close down, they'll also go home. I have made 3 trips to west of Nairobi. I do this in Rongo. It is that is actually why I came here today. I left at 4 a.m. to come for this meeting. My prayer is that today when I leave here, I will have an answer or I will close down my company. The last thing that I also want to say, I think I'd applied, I think that was the other year to be transferred to a station closer. If only this had been implemented and maybe someone who can just maybe reach me in the company and guide us, hold our hands. It's not women don't want to talk, but just hold us. And I think women here are very brilliant. Women speak less, but we act more. That is why right now most SMEs in this country are held by women. Thank you so much for this opportunity, KM and KRA. Thank you very much. Yeah, we appreciate it.
Asante Caroline. Before we move on to the next question, allow me to make a comment on the first statement that she made. First of all, apologies that you went through that. That is not how we work as a KRA. Madam Hakamba started her presentation by saying KRA services are free. You are not supposed to pay for services. You will pay tax, but you're not supposed to pay for services. So when you walk into a KRA office, you should expect to be served for free and expeditiously at that. And for that, offices, but we have a platform. It's called iWhistle. It's in the KRA website. You can put in your comments there. Because again, if you don't report such incidents, then you're also failing the next person, because that person will go on to harass somebody else. So allow the measures that have been put in place to deal with such to actually do it. And that's why we have the iWhistle. So KRA website, iWhistle, it is an anonymous reporting platform. Sawa sawa. Okay, we can move on to the next question. The issues on special table, and I think transfer of PIN will be dealt with by Madam Wanja. We can take more questions and then.
Hello. I want to direct my question to Madam Wanja, which is on, she talked about installment tax payment. I think by default, the iTax system uses the 110%, which is last year plus 10% growth by default. But of course, the law provides that there are two options. You can either use current year or use previous year. Now, where you take an approach and take any one of those measures, I'll probably say I use current year. My belief is that penalties should only come if I've ended up underpaying tax. I think I have a contention, and now that policy team are also here, where you use current year, but there's a feeling from policy that by virtue of Schedule 12, you ought to have notified the commissioner that you are using current year. Now, the penalty rise because of the approach I've used, or because in the end I've ended up underpaying tax? That's number one. On refunds, and David and his team are here, the use of debit adjustment vouchers in assessments. If we've talked from what Madam Wanja has presented again, you have input, output, you are either in a payable or not. So from your initial VAT ledger, you transfer the claim, which goes to the claims ledger. But at the end of the day, if there is an input claim that they have denied, you will get it being reduced against what is payable to you. So that amount has already been transferred from your VAT ledger to the claims ledger. Now, so if, for example, I had claimed 100,000 and they rejected 20,000, they will already have deducted the 20,000 and only paid me 80,000. Now, you will realize again that when you are filing your return for the next month, that debit adjustment voucher, you are told you have a debit adjustment voucher to declare, which means again, it's deducting from your initial ledger. So you are being deducted on the net payment and against on your credit brought forward based on the debit adjustment voucher. So that duplication, I don't know how KRA would be able to handle it. And lastly, the issue of offset for refund adjustment vouchers. My case would be that it's really going against the law. I know it's a treasury directive, but I would be of the opinion that it is really, because Section 47 of the Tax Procedures Act simply says you have taxes being offset against that particular act, any other tax law, be refunded or paid through a refund adjustment voucher. So I don't know why PAYE withholding taxes are considered not to be usable against refund adjustment vouchers. Thank you.
Asante, your name?
Thank you. I have two questions. The first one, sorry, my name is Fiona Mugambi from Octavia Carbon in the climate tech industry. So for us, I think we've been experiencing two issues which we're not sure how best we've we've not had enough clarity, at least from KRA, or at least even the consultants we've been using. So the first question is, we are a Delaware corporation, but you have operations here in Kenya, so we're operating as a foreign branch. Now, because of that, there are rules like such as the transfer pricing policy that come into play. And there has been some vagueness where we've received two types of advice where because we're a foreign branch, we may not actually need to pay the deemed interest for this to KRA for our transactions from Delaware to Kenya and things like that. So we'd want to get clarity around that so that we know we are fully compliant with KRA and we don't have KRA knocking on our doors unexpectedly. So the second question is, as a function of being a foreign branch, 90% of our employees are Kenyan, of course, or sorry, 98%. So we also have employee share options that are given to employees where they can be able to exercise their options through the Delaware Corporation. So the way I understand how the share taxation work, I'm sure if it's a Kenyan company, you're supposed to pay tax on when you exercise your shares once the company goes public on the Nairobi Stock Exchange or something like that. So there is some bit of grayness or vagueness because by virtue of being Kenyan employees, they're not really mandated to pay tax in the US, but you're not sure if now they'll have to pay tax here in Kenya. So maybe clarity on that so that we also, when we give these options or we give these shares to employees, we also know how much will they also be due with KRA. Thank you.
Thank you. Good afternoon, everyone. My name is Joyce Karaoke from Hasba Kenya Limited, and I'd like to applaud our presenters who are 99% women. So yeah, kudos to you guys. My question would be, what happens to the duty paid on products that came into the country, but for some reason, either a delay for KEBS testing and all that, destination inspection, we are not able to sell because maybe the shelf life has reduced and all we can do is either ship it back or destroy. What happens to the duty that we have already paid? Thank you.
My name is Boniface Rono. I have three questions. One is stemming from what the agony my sister has gone through. Then the question then will be, is it possible to transfer the PIN base? Or, she said that the business was registered in Nairobi, but the business now is running on some other parts of the country. Is it possible to transfer the PIN base? Like, for example, instead of her traveling all the way from Rongo or whatever to west of Nairobi, is it possible to have the PIN being transferred to Rongo, for example, maybe for ease of operation and also to save her from the cost of traveling? Question number two is on the issue of VAT refund. I think this one goes to Anja. I must appreciate Anja for the wonderful presentation. It is on the issue of VAT refund claim on bad debts. Is there any standardized procedure with clarity on documentation required for one to launch that claim for VAT on any bad debts written off? The last question will be on the question of you are transacting with a customer who is cross-border, or the customer is domiciled on the other side of the country, either individually or as a registered business. We always understand that we have the question of C17, we have the exit note, we have the C2. I don't know whether all those documents are required if you have a C17 in place. Maybe for me to roll out the exemption on the VAT because of the cross-border transaction. If you can share some clarity on that, I'll really appreciate, including the documentation that may be required, whether the three of them or one is enough. Thank you.
Thank you, Boniface.
My name is Pauline from Band Manufacturing. I have a question to the policy team. When new laws are enacted, I feel like when they favor the KRA, enforcement is usually quick and like mchezangi. But when the law yenye imekuwa enacted favors the taxpayer, I feel like you kind of sit back, wait for us to make mistakes, and then you come after us. There's a private ruling going around about losses, carry forward losses. I know it's private, based to that person, but it's gonna set precedents to all other companies. That's unfair because you cannot enact a law today and like date it back. Because let's say if you are to say you've reduced VAT, there's no way you can go back to other years like prior. So I hope that's going to be addressed. And then the second one is on amnesty. You guys know what you did to us on 30th. Most of us were unable to submit returns, but for our company mostly, the amnesty that was due 30th, we did file and pay by 30th. So by virtue of law, we are entitled to the amnesty for prior year because we paid by the due date. But because the system was not working, it was not enacted. So the policy says that that system has not been enabled right now. But my question is, like, will the system be relaxed to favor us or what? And then the next one, the one that commissioner granted until 5th, as at now, but haijatolewa. So we want to know when that's going to happen. Thank you.
Thank you, Pauline. Sijui niseme mapema ndio best. Next question.
Hi everyone, my name is Vivian from Crystalline Salt Limited. So I have question on refunds. I would need some clarification and guidelines on how to proceed because we got a debit adjustment voucher of some significant amount. We wrote back to the refund department asking for explanation for the reason. They told us that it was about some import purchases, that there was no proof that we bought the import purchases. So what we did is we shared all the documentation, payment slips and proof of payment, telling them that we incurred these expenses. So they immediately wrote back to us within a week saying that that decision of checking our objection is not within the refunds commission. So they told us that if we would like to appeal the decision, we can proceed to lodge the appeal on ITAX, which we did. We proceeded to appeal against that debit adjustment voucher, and we got an acknowledgement receipt that we have lodged an appeal on that assessment. But it's been now 3 months with no follow-up, no feedback on how to proceed regarding that amount. So we are seeking clarification on how to proceed with such disputes and guidance on timelines. If there was delays regarding to timelines, we'd also need clarification on how we should be doing it so that we can at least have feedback on how to proceed going forward. My second question is from what she's just mentioned on amnesty. We really wanted to take advantage of the amnesty. I remember we were also in this hall discussing issues on amnesty, and most companies like us, we had legacy issues. So we had legacy issues that had to be sorted for us so that we can pay the remaining small amount of liabilities and take advantage of the amnesty. But you see, up to date, the legacy issues have not been sorted. So we were not able to take advantage of the amnesty. So my question is KRA considering such cases? Or are we going to pay liabilities again for issues that we would have sorted a while ago? Thank you.
Thank you, Vivian. Any other questions?
Good afternoon.
Good afternoon.
I had a question to policy. So there was excess duty regulations 2025 on remission of spirit and wine, majorly. And my question would be, how soon should we expect this gazettement for the regulations now to be enacted? The other question I had was on excise, around excise tax compliance. So one, on the template, after the enactment of Tax Amendment Act 2024 in December, we've had a challenge declaring product under Tariff 2206. So the template at the moment still reads 142.44 as the excess duty rate, which I think at the moment has been overtaken by the new enactment. So I think that needs to be updated. We had raised it with LTO, but this has not been effected at the moment. The other one is on the recent template update. From 1st of July, there was some excise duty introduced on services, but now the challenge now has become, the template now is forcing manufacturers to declare excess duty on both goods and services, which for me, I was not understanding why, because once you get into the template and you register your goods that you want to pay excise on, when it gets to the service bit, you need to open up that tab for it to go through. So I think it's something that needs to be corrected, so that if a manufacturer only has goods, then we do not need to declare both goods and services, and we can just declare that which is in within us. So that's it from me.
Thank you. Your name? Your name, madam?
My name is Elsie. I'm from Kenya Wine Agency.
So thank you. I think we'll start responding to the question. We'll start with Madam Chow. I think she only has one question, and then we move on to Wanja, who has several. Madam Chow.
Thank you for that question. I think it was from a lady, but I didn't get their name. It was on importation of goods that, who? Joyce. It was on importation of goods that come into the country, then they are not sold and there's a reduced shelf life, and there's need to re-export them back. Oh, I think if you want to get a duty drawback on your export, you'd have to export them to get a duty drawback.
Okay,
but
what if it's cheaper to destroy than to ship back to the supplier?
I don't think.
Let me give you a practical example. We're importing biscuits. In the country, I've cleared with KRA, now it's with KEBS for internal destination inspection. And for some reason, by the time the results are coming in, the shelf life is too short for us to put it on the shelf. So there are only two ways you can deal with it: destroy or ship it back. And for most, destroying is usually the cheaper option. What happens to the duty I had already paid to KRA?
I don't think there's anything in the act that provides a refund when the goods are already in the country and they expire while here, because then we would expect that the importation was done in time, because we can't control that time period. But one of the things that we do as customs, we auction. We have an option of auctioning if KEBS allow, if the time period is not so short. But that would not benefit you. Your only benefit would come if you exported back to your country of origin. And this has to be done within 12 months of importation.
So that's the only time the duty that we paid, we can claim the duty is paid.
Yes.
So we incur the re-exportation cost so that we can claim our duty.
Yes, when you do when you're doing the export entry, you do one under drawback. So we then will refund you back your duties.
Okay.
Yes.
Thank you.
Thank you. Joyce, and note the timelines. It's within 12 months from the date of entry.
Thank you, Madam Chao. Wanja, kazi kwako. My questions are only three. The first one is on special table. And special table, we basically use that as a measure to deal with people who have not been filing or who have just been filing nil or credits, and maybe there's a gap that we need an explanation on. And unfortunately, her case, she talked about sending the email, and it wasn't acted on. She has also indicated that she sent the documentation, but it has not yet been effected by now. The sending of the document and it has not been effected, I would say that's a concern that I also have. And after this meeting, we shall meet and have your issue sorted. Yeah, because it shouldn't take long. After you have cleared the concern that was there, we need to clear you. Yeah. So you will go back to Homa Bay, or you said where? To Western, a happy person. Now, just on that note, I want to inform us that we are doing a data cleanup. And so you shall be receiving communication to us where we note that you have been a nail filer for so long, because the question is, if you have been a nail filer for the last 2-3 years, do you need that obligation? No. So we shall be reaching out to you because we want to actually clean up that data instead of you having an obligation that you're just filing nail all through. In addition to that, we are cleaning up the data for the inactive taxpayers as well. So you, in case the PIN has not been in use and all that, you shall be receiving communication on that. Now, the other thing was about the change of station. The change of station facility is still on. And actually this July, a number of cases were approved that I'm also concerned that hers is not among the one that was approved. But even as we proceed with that change, I wish to inform us, KRA is going stationless. So we are actually piloting these first 6 months. What that basically means, you do not need to move from Kisumu to Nairobi. All you need to do is move to any service point that's near you. And that service point is the one that takes up the responsibility of following up on your issue to completion. So do not move away from your office. I know, except now, like for the large taxpayer and medium taxpayer, you would rather, you have your account manager that you just make a call to. But for the small taxpayers, do not move. Let the issue move, not you to move. Then the third one was amnesty on 30th June. Clean up, okay. So she says that amnesty was up to 30th June. And when she actually paid, the cleanup has not been done. So I want to give you an assurance for any person who filed their returns within the required timeline of the 5th of July for this year. We have sought approval from Treasury and we have been granted. And so those penalties that are there, you do not need to do anything. We are cleaning up from the back office. So be at peace. An approval has already been granted from Treasury, and we are doing that cleanup. So similar case to somebody who had an amnesty concern and paid by the 30th of June.
we are doing that cleanup. So be at peace on that. Then the last one is, there's a lady, I didn't pick her name. She says that she had legacy issues that needed to be sorted, and they were not able to sort by the timeline. So they were not able to take advantage of the amnesty. What's her response? What would you tell her? They are laughing because they know. Since the issues were not sorted, then it means you did not qualify for the amnesty. And maybe what we would say, it's sad that we are speaking about it now when already the amnesty is closed. But I would like us to, any other time that we have such concerns and there is a place that our issue is being delayed, if your account manager is delaying your issue, do not stop there. That's why there is an account manager, a relationship manager, a cluster manager, and a station head or a tax service office head. Do not remain there. Just move to the next level so that your issues are fast-tracked and we resolve them fully. I think many questions were from policy and refunds. Policy, karibu sana.
Good afternoon. Thank you. So my name is Leonard Cheserem from Policy Division within KRA. And my colleague has said most of the issues were policy issues. When I stand here, I stand with two hats. I'll try to explain, because KRA as well as the National Treasury. Sawa. Because the National Treasury basically is a policy arm that does all policy issues on tax issues. So what I'm going to talk here about is to just give some of the issues that are coming in terms of policy, but basically if there are issues that touches the law, the person who can change for us the law is always the National Treasury. Sawa. So we are only, I know you saw from most of our presentations, KRA is a revenue. It basically does with revenue collection. And we are not shying away and saying we are not going to answer the questions. I'm going to answer the questions to the best of my knowledge from the policy point of view. We have the first, there was a question on, I think the question of installment tax. That's the first question that I was being asked on installment tax. Yeah, the law under section 12 of the income tax says you need to top the 10%, 110% basically for the next year. So this year is assumed to be 100%, then next year you add 10%, it becomes 110%. So what happened is that we've had issues where sometimes you don't pay the 110%. So what happens is that there's a penalty under the Income Tax Act that was there that actually penalized you for underpaying the installment tax. And that penalty has been removed from 1st July of 2025 through the Finance Act of 2025. So the only penalty now we are going to rely on basically is the one that is the Tax Procedures Act, where we are only looking at the point of late payment, not the underpayment, because that's I think we had a lot of problems because people will feel that was infringing, because sometimes what used to happen also, sometimes when you're supposed to pay the balance of tax, then you realize that you're supposed still to pay that amount, then you realize you underpaid, then it actually punishes you, because when you calculate the total amount, you are actually paying less because of balance of tax, then it penalizes you. So what that has been done away with, we only have one penalty now. The penalty that was there in the income tax on underpayment of installment tax has been removed. So we have harmonized everything now on ITA. There was also an issue of, I don't know, maybe the refund we'll talk about, but it touches the issue of treasury, where you are given a refund adjustment vouchers, but the government has said, I know some of you, I don't know where you got that letter or where you got that information, that treasurer has said you cannot use it for payment of PAYE, withholding taxes, and even for withholding VAT. Yeah, so the argument measure that is coming in is that when you're paying that tax belongs to somebody else. That's not your tax that you're paying. So you can only do a refund adjustment voucher for your taxes. But the taxes you're paying is a withholding tax that belongs to somebody else. And also you are dealing with PAYE that does not belong to you. That's the argument that is there. I know some of you are very dissatisfied when they hear from that angle, but that's the angle that is being taken or that has been explained from a policy point of view. As I said, I'm wearing two hats. So that's the policy point of view from the National Treasury, that the taxes that is being referred here is the taxes that belongs to somebody else, which is a third party. Like, for example, PayUI, you're only an agent. You're only deducting from all the employees that are here, and you're paying on behalf of those employees. Withholding VAT or withholding tax, you're also deducting a payment that is for somebody else, and you're paying on behalf of somebody else. But that money does not belong to you. It belongs to that third party. That's the argument that is there. I hope I'm trying to clarify the issues that are coming in so that you understand why it's being taken like that. Then there was an issue of transfer pricing. Now, for transfer pricing issues, there's a foreign entity in Kenya, which is a branch, not a subsidiary. And this entity, there are a lot of, you're talking about the issues of transfer pricing. So in case you feel like there's a lot of issues, I don't know if, is it LTO or is it an MTO company? The one for transfer pricing. LTO, MTO? Is LTO? Okay. Or is it a large taxpayer? Okay. Maybe what we'll do, my colleague here will take the details because we need to understand the issue. When you are dealing with transfer issues, pricing issues, we have a specialized division that deals with those issues. We have a very specialized division that deals with those issues. But basically what I'll say is that transfer pricing issues arises when you are dealing with, when you fail to deal with your issues on arm's length. So what it means is that, I know my colleague said something on law jurisdiction, where you are supplying to your related company and you realize that what you are supplying to that, or what you are getting from that related company is actually not within the arm's length principle, which means if I was go to the same market and get the same item or get the same loan, I'll get it at a market level. But for you, because you are related, you get it at a lower, maybe the interest was 14%, for example, for the market rate, but for you get it at 0%. So what happens is that for that one now, for purpose of transfer pricing adjustment, you have to deem it as the amount that the government is losing. You have to deem it between 0 and 14% as what the government is losing, because you are actually getting undue disadvantage because of your related party. And that's where the issues of transfer pricing comes in, because you're not dealing with it on arm's length. You're dealing on a platform that you are getting an advantage. So for this one, if you can be able to give us the details, we'll link you to our people on transfer pricing so that they can sort your issues in case there are issues that you feel like they are not adequately answered or they are not adequately addressed, or you want to understand more. Because now we are coming in even with issues of APA, for example. Yes. Yes. Yeah, so that's what I'm telling you, there are certain things they will look at. There are a little bit of more structures they will look at. Because we also look at many other structures. Apart from that, we also look at the employee costs. We also look at administrative costs, who is paying the administrative costs, who is paying the employee costs. Probably the company that's outside the country is requiring you, the entity that is Kenya, to pay the employee. And that's why transfer pricing issues. Because you are paying for an employees who are actually working for another entity outside the country, but you are in the country, you're supposed to only pay for your employees in the country. So those are some of the administrative costs I'm talking about. So those are things that we disallow in law. For example, we disallow in law because you cannot pay administrative, or you cannot incur an administrative cost for a foreign entity, and yourself, you are here having a PE in Kenya, for example. For your case, you have a PE in Kenya. But you have another company, for example, in Delaware, you said Delaware, which sometimes you may find that there's a director, and then they say this director A will be paid by a company in Kenya. And those are issues with a lot of issues with these multinational or these entities that are there. You realize that a director that is working in Delaware, US, will actually, director A will be told your salary will not be paid from US. It will only be paid from an entity in Kenya. And those are the things I'm talking about now. These are transfer pricing issues that needs to be dealt with the specialized team, because some of those things have to be disallowed. You cannot be allowed to actually claim an expenditure for paying an employee cost for an employee that is in US. Or there are certain management or administrative issues that also are basically disallowed. There are certain costs that you are basically disallowed. So that's what my response is that you can give us the details. We'll link you to our people in transfer pricing. They will really help you on some of the issues that you're having. And yes, and even on issues to do with ESOPs. Because ESOPs, you talked about employee share ownership plan, where The employees in Kenya, 98% of your employees are Kenyans. And then 98% of these employees are working in Kenya for the entity in Kenya, but they are given shares for this company, which is actually probably the shares are not floated even in Kenya, they are floated in the US. But they are giving you these shares as part maybe of bonus, as part of something like part of your payment, and we call it benefits. Actually, in income tax, we call them, these are benefits you are deriving. For example, for me, who is not working in that company, I'll not get that offer. And the offer they always give is lower than the market value. If I was to buy the same shares in the US, probably they're $10 per share. But for you, because you're an employee, you're given a $2 per share. But the moment you actually exercise that option by actually agreeing to take that option, so you'll pay it at $2 per share, then which means the difference between 2 and 10 is what we derive it as a benefit that you are supposed to be taxed on. So these are some of the things I said. We will link you to our colleagues so that you can be actually addressed to. Because if you're working for a company in Kenya and their shares either floated in Kenya or not floated in Kenya, and the employer has an ESOP, because the biggest thing is the employer has a plan, an employee, the ESOP plan. So when you have that kind of a plan, then you're actually deriving a benefit from your employer because you are actually enjoying something that no one else is enjoying. Sawa. It's like being in an institution where they are giving mortgage. Does anyone outside there get the same mortgage? No. So that's a benefit for you that needs to be taxed. Sawa. And I know there are things that you maybe Wanja did not talk about. You will even hear of issues that are coming in, like where the fringe benefit tax are coming in. So that's the things where the employer pays on your behalf, especially when they give you a loan. An employer gives their employees a loan at a lower market rate value, then the employer says, I will pay this tax on behalf of my employees. But this is an employee that's enjoying a benefit, not the employer. The employer has only given you a lower rate of tax, but you as an employee, you are the one deriving the benefit. Now, the next question was on issues of when new losses are being enacted, and this is a question from Pauline. And I know it's very specific on the 5-year period on carry forward of losses. I know that from 1st July of 2025, carry forward of losses can only be allowed to a maximum of the year of income 2020. You look at 5 years from now, from 1st July going backwards. The only losses you can carry forward is up to that level. So what the law provides is that you cap it up to the year of income 2020. Anything prior to that means basically, what does that tell you? You shouldn't carry forward. That's the law that we're given. As I said, this is a law we're given by the National Treasury as well as it's legislated by the National Assembly. So what the role of KRA becomes to? I know somebody said we like to enforce it. That's what we do. That's because that's the law. And if we don't enforce it, we are also being forced by the Auditor General that why did you not enforce the law as per your mandate? You have failed by your mandate to enforce the law. Sisi waje tufate sheria. Sawa. So we also follow the law. So the guidance there is, I know somebody have said there's a private ruling, and I'm very sure some have written to our office. They have been given a private ruling that you cannot carry that loss. Maybe in this case, you can talk about 2019 loss, because we're talking about 2020 cutoff coming forward. So, okay? So which means now, if anything happens, because there's no transition, we are not given any transition. So the bad thing about the law that was given is there's no transition. It doesn't tell us what do we do with the losses of pre-2020. So in short, you interpret the law the way it is, because sometimes if we get challenges, we go back to the AG. And AG and the National Treasury, they tell us this is the guidance. So KRA need to follow the law and enforce the law the way it is. And we apologize because some things are not, we don't do it by design. Sawa. It comes by as the law, and it's mandatory for us to do it. Then there was an issue of excise duty. I think this is something else you talked about. We did a public participation, I think somewhere in the last 2 months or 3 months, on excise duty, on remission of excise duty. Remission of excise duty has always been given to only those who are dealing with beer. Remission of excise duty means you don't pay the full amount of tax. And this is where the remission comes in when we're dealing with the famous, cake. I know some of you have heard of what the alcohol called cake. So that's what the famous on excise duty, where the law only allowed for beer. Then in the Finance Act of in the tax laws of 2024, it was extended now to spirits, where the law now needs to give remission to those who are dealing with spirits. So we did a public participation some few months ago. We are yet to finalize, and we are coming back. We are coming again back. So we are not finalizing it now. We are coming back for public participation. There are certain issues that we still need to relook at with the taxpayers, and you understand that if we don't do public participation and we go and publish it, you will run to court and say this cannot be implemented. But sometimes if there are things like that where we are granting tax incentives and you go to court, KRA will relax and to end up because we were losing tax anyway. You know, when you're giving a remission, you are losing tax, in short. So in case you run to court, for us it is okay. Tutaendelea venye tulikuwa, si ni kweli? Tuendelee collect your kidogo, right? Not in a bad way. So basically what I meant is that for remission of excise duty regulation, for those who are dealing in that sector on spirits, we're coming back. Maybe in the this week or not this week, maybe next week you'll see something on public participation. We're coming back to still undertake public participation because there are certain circumstances that we need to deal with. We can say that there are things we haven't clarified. Probably we still need to clarify again in public participation so that we can agree. Now, there was an issue of where the new law comes in and sometimes the templates are not amended. Please, if you have this, I know you've talked about the template on goods, where sometimes you are requested to also talk about services. I think something that we can pick with PTO from here. I know Wanja is really working on that sector. She doesn't want to see anyone having any gloomy face because of something like that, small things that can be done. So we will relook at that issue and see if there are any templates or if there are any returns that are not aligned with the law. So we'll make sure that it's aligned with law, because we've, from our policy side, we've tried to make sure that everything is transmitted, make sure everything template is changed. But in case there are any gaps that has not been done, I think we'll take up from here to make sure that in the next return is the next few days. I hope I'm not over-promising. Maybe in the next return or the next one, you should be able to have cleared it. I know it's today's on 12. So in 8 days, I hope we will be able to have some of those things will be deployed in the system. If there are minute issues, some of them may not be difficult issues. Maybe they are just errors in the forms, and I hope it will be addressed so that in the next return, you are able to make sure that when you're filing your return, those things have been addressed and they follow the law. Is there any policy issue I've left out that I have not spoken about? Any policy issues that I have not, from the presenters who came, from people who asked before? I know there are sets of questions that are coming in. Okay. I think I've answered already. No, I've answered. Anything I've left? Because I have tried, as you know, when you're in policy, you make sure you write everything. You don't miss anything. So that's how spelling. Because you can use it against me. Anything on policy? Oh, there's something on bad debts. Refund on, for bad debts, VAT. Okay, on VAT for bad debts, I know the law was changed recently actually. It's not, you don't have to wait for 3 years. You wait for 2 years, not 3 years anymore. You wait for 2 years. So I don't know what it was about on bad debts. I didn't capture that one. But if you are dealing with bad debts, the law is very clear. If you are put on statutory management, an example is the NACOMAT. If you are put on some of those receiverships, you are put on issues to do in insolvency, then you wait only for 2 years. Then you actually request to the commissioner for bad debts. There's a process. I think that's not a very big issue that the way like refunds.
I think maybe the question was mine, and away from the humongous right of start talking about the giant companies like Nakumat and the rest, we are talking about these other private businesses around us, because we also have bad debts in our own capacities. So I was asking, could there be like a standardized procedure or documentation that may be required from us when we do a write-off within our books that we need to submit to the KRA for us to be given the leeway to claim the VAT? Okay. And maybe for clarity, I had another question about a customer or an individual who is domiciled in another country. I think that was a cross-border transaction where we were saying we are always asked to maybe produce C17, the C2, and the exit note for any transaction that is crossing the border. So I was asking, will it not be sufficient to have the C17 maybe to warrant the exemption to the customer or in our books for the VAT whenever we are required to do so. Thank you. I'll appreciate if we can have clarity on the documentations that may be required on that respect. Thank you.
Okay. I think Madam Chow, the C17. Oh, it's an entry. So I think Madam Chow will clarify that one, Laura. And then somebody from refunds will tell you about the issues on bad debts or how you can go about it. Yeah, so, karibu.
Good afternoon. Yeah, my name is David Otieno. I'm from Refunds. We are the team with Wanja. And we had 3 questions raised. One was one in bad debts, and the other was those bad debts under the debit adjustment vouchers, and the other was the appeal from Vivian. Now, let me start by saying this. From Eric, you requested about the debit adjustment voucher, which was allowed during refunds processing, and again, you are asked to declare it in the return. Ideally, that should not happen. What should happen is that when an input has been disallowed, it's been disallowed from the input of the particular month that you claim the refund. Again, you should not be asked again to transfer it to another particular month to lessen the credit of that particular month. Now, when this question was raised to us, in fact, I did follow up with our systems people, and they said those are actually a few cases which are unique, and there are some which have been raised before. I don't know which particular company it was, Eric, but when I asked, they said there are a few companies which have been raised, and BTO is actually following up on that thing because it's not a system thing. Maybe it's just a unique thing that happened to that particular taxpayer. It doesn't happen to all the taxpayers. Now, so that one of yours will be looked into. I think maybe if you just follow up with the refunds guys, and refunds will follow up with the systems guys, and we'll see that that thing is actually solved. The other one, you talked about, Eric, a question about the set-offs. Yes, indeed, set-offs under Section 47, you're allowed to do that. But as policy has said, there's an issue. And I think policy has explained it very, very well. Okay? So for that one, I'll not take it up more than what policy has done, because they've clearly explained that is an issue that has been brought up by so many other taxpayers, and it has been well explained by policy. Now, the third one was the bad debts from Boniface. Now, bad debts, you're allowed to claim bad debts. Bad debts claim just for the education for everybody is on those invoices that you invoice somebody and you paid him on credit. You sold to him on credit and they didn't pay you. You want to charge them VAT, they didn't pay the VAT and they've disappeared or somehow, you know. And you yourself, you paid KRA that VAT. Ideally, we're supposed to pay you back that amount. Now, the documentation you need, because you won't just come and say that person disappeared. Everybody can do that. Okay? So you're going to make a claim, but first of all, that person should have been proven insolvent by the court. You understand me? Not that just somebody disappeared. It could be a friend who now may be staying somewhere in Uganda and will come back after a few years. Okay? Then another thing is that there should be proof that you tried to actually pursue that particular debt. You don't just sit there and call it bad debt. What did you do about that debt? So those are some of the documents that you need to attach. And the law used to be 3 years, but it was changed recently to 2 years. So to 2 years, after 2 years, and you've just pursued the person for 2 years, and then you can make your claim. Then you come with that, and we'll be able to sort it out. When you're claiming that bad debt, okay, you have to have that list of the debtors also. Those are some of the documents that you have to attach. I hope I've answered your question on that one. Yes? The 2 years, the 2 years is you have to pursue them for 2 years, not 3 months, not 6 months, but 2 years. Understand me? But the upper limit is 10 years. 10 years? The upper limit is 10 years. You can't get it, yeah. Prove. Clear to everybody? Yeah, because if people are in manufacturing, people might disappear with their money. And, yeah? So just get that one clear. Okay. Then Vivian, the debit adjustment voucher. You did appeal. And you're asking for the timelines and the SLAs. I don't know where the appeal is. Where did it pass IRO? Or where is the appeal? Because IRO is within our jurisdiction. We have SLAs, but anything beyond that, we don't have SLAs for TAT and court.
We lodged the appeal on ITAX.
IRO?
Okay, and we didn't get any more response on that. The only thing that we did was we lodged the appeal, and then we informed the refunds department that we have lodged an appeal, because they had said, you can lodge an appeal and inform us. So okay. That is where we ended. Okay, we do have an independent review of objections. I think you're talking about an objection. So they're not, well, upper hill. Yeah, just pursue that particular objection. Because when you talk of an appeal, I think an appeal is after the objection and you lost there and you've gone further. And then beyond that, I think the SLAs now are not within our mandate. But what I encourage you is that just take it up with, so long as you lodge on ITAX, it is somewhere in Westlands. Just pursue it and see how fast they can conclude it. Okay, but I still feel like we should have gotten communication from ITAX, because how would we know that information? Because once we send, you get an acknowledgement as KRA of something we did, we expect that you'll give us a communication on. One thing about ITAX is a very amazing system. When you do anything you do on ITAX, you get a feedback on your email. When you lodge, you must have gotten some feedback there, and then maybe they've invited you for an interview through ITAX also. Through your email on ITAX. Just check out whether you're invited for an interview. Okay? Then they're seated at Upper Hill. Just follow up, because you have an acknowledgement number. They'll definitely have SLAs within which to solve your issues. Just please follow up with them. Okay? Yeah. Well, those are the only 4 refunds questions which I had, which were raised. Done. Unless there's any other which I didn't hear. Oh. Okay. Yeah.
If I got your question right, you said it's a cross-border business. So how would you account for them in your books in Kenya? So you talked about a C17, which is an entry. In ITAX, that would be deemed as a purchase, I think. So it would go into your books as a purchase, and if you've paid any import VAT, then it would be deemed as input VAT. So then when you sell, then you counter it with an output VAT, if I got it right.
Okay, my concern is I'm selling to a customer cross-border, not an import in this case, but an export. And I want to know the documentation, because at some point, KRA officials will be coming for an audit to see whether I'm really in compliance and conforms with the requirements on my exempting this particular customer from this particular VAT. So I wanted to know whether when the auditors come, do they require all the 3 documents, or C17 will be sufficient?
C17 would be sufficient, not unless they cannot get it in the system. They would then want an import entry on the other side where you're selling, or even an certificate of export, which right now we issue them automatically.
Okay, but that means it doesn't, even if it is an individual, I don't have any issue if I warrant an exemption on the VAT for this person. Maybe he's trading as an individual, or maybe a proprietorship business or anything, that's what. Because when I'm exempting the VAT from this end, I want to be quite sure. I don't want to be ambushed, because as you've heard, most of my colleagues have mentioned that KRA can be so quick to be on your neck when it is favoring them. But when it is going the other way, the silence is the order of the day. Yeah, so I just wanted to be quite sure about it. Thank you.
Okay, thank you. I hope if you encounter this, you can come to our offices. But when you say exemption, that's a totally different regime. It's not the right word to use, I think, yeah? It's not an exemption. Maybe it's 0 rated.
It's okay.
Yes.
That is exactly what I mean.
Do we have any customs official who can add to it?
Thank you, Boniface. Personally, what I advise my friends, when you're dealing with government, just keep all the documents. Make sure you get all the documents that for that transaction, and make sure you keep them for the time that you're required to have them. Because for us, yes, you can do an entry, but how do we confirm that you actually exported? So if you have a road manifest, that is the C2, and you have an exit note, that is additional information to show that you actually exported these goods. And then at the border, you make sure that you get your COE. So once you get your COE, that's proof that you have actually exported. So just have your documents in order when you're dealing with any government institution. Sawa sawa. Si tumekubaliana hapo. Okay, madam, you have a burning one. Sawa.
So I have a burning one. So when we started, just a comment. When we started, there was a question from withholding VAT on the paying 5 days, but then you have the 24,000 on a month that hasn't been answered yet. So I'm hoping someone can answer that. Then I have a question on imports. So there is a product usually import, and then there was a ruling that the HS code for the product changed. Now, so the ruling was done on the 12th of September. We did that clearance on the same 12th of September with the previous HS code where the import duty was 25%. Now the product was changed to another HS code where the import duty was 35%. So now we didn't know that at the time, and we did it through the ICMS, and it went through. We paid all the taxes, VAT, everything was paid for, the entry was good. After 3 months, customs came to us with a rework and penalty for underpaying the customs. So, like, what is the time period between when a ruling, you see, we are not in court every day with the KRA tribunal to know that a ruling has been done today. So if a ruling is done today and you don't update the ICMS, how are we supposed to know that? What is the time limit between a ruling and updating the system, and what is happening after that? Then on the policy guys, excise template has not been updated. For the past 8 months, we are doing excise as centiliters and liters in one template. Please, kindly update that. So anything that is not beer and spirits is being paid in liters. The other ones are being paid in centiliters. So when you kind of do a total, you have a mismatched number in the total. So I had called EGMS about it for around 3 times now. It has never been updated, so I'm hoping that can be sorted.
Have you done an objection to that demand? Not.
we didn't have time to do all that because they were holding off for 2 years. So what we did is we just paid that. So they gave us the date of the ruling, which of course we decided, but now we started explaining to them that the time, like we should have had time to be told that this ruling has been changed, but we were told we couldn't do that. So we paid everything and finished. Maybe my recommendation is when these are ruling, at least put in a time period from when a ruling has been done, when it is effective, and update the ICMS immediately so that we don't do one with the previous and just go and change it up. So we've already, we did that last year in
Apologies for that, but just to be informed, there's a process of appeal that's in the Act. So you don't have to go into costs of paying taxes where they are not due. So please, next time you can get in touch with me. There are processes of appeal. You can object commissioner's decision, and there are spaces where you can be heard. Yes. Yes. Okay.
I think also there's something called paying under protest, right? So customs is tricky because you want your goods immediately, and there's still processes that need to take place. So because of that, we find people just pay and then move on, okay? So you can actually request for to be released your goods to be released, and you do it's a letter, you're paying under protest, so that we know that there's a dispute, but you're paying, and then once the dispute is resolved, then if you're supposed to pay whatever tax, then you pay. If you're not, then it's done away with. We'll come to you. We want to respond to the withholding tax, and then we come to you, Sawa.
There was a question on withholding tax where the law provides that you need to withhold and pay to the commissioner or remit to the commissioner within 5 working days. Then there are circumstances where the law also allows that when you meet a certain threshold, that's when you can withhold. For example, when you're dealing with management and professional fees, that you at least in a month, an aggregate of amount not less than 24,000. Now, we have how many days in a month? Roughly 30, 28, depending on from 28 to 30 days to 31. Now, for commissioner, I don't want to use it in bad faith, but the question is, if you expect that to pay this person more than 24,000 in a month, why don't we just withhold and pay within the working 5 days? But if you are really sure that this person will not exceed 24,000 in a month, then you should not withhold. You will not be penalized. But the tricky part is the moment it crosses the 24,000 and goes to 25,000, what happens? There are certain things that sometimes I may not really be able to administrate because it's a little difficult and a little bit tricky. And I know it's close to the issue that we've had on secondary employees. Utangoja KRA wakuja alafu wakwambia ulifanya makosa. I know that's the fear you have. But my advice would be, if you expect that this person will earn an aggregate not less than, because maybe you have a terms of contract, that it would be at least 24,000. Then why don't you withhold? So that at the end of the 24,000, then you've already paid. Aggregate in a month for that person will have already reached 24,000. Because the moment it triggers in the system that this person, you've actually not withhold, the moment we come and check your books and we realize that in a certain month, a person was given an amount in excess of 24,000 and you fail to withhold 5%, you know that we will come for 5% on the penalty. We will also ask you for an interest, if there's an expectation, okay? Because the issue is just making sure that you know your dynamics and ensure that if you know that it will exceed 24,000, you just withhold. That's the safest part. Sawa. Because I don't want to put you also and tell you, please don't withhold because it's less than 24,000. And then at the end of, by 27th, you realize that this person you have paid this person 35,000. What happens? That's the risk part of it, isn't it? In handling tax issues also, you need to handle something called risk management in tax risk management, or tax governance issues, you just have to balance some of the things because you are not sure what happens with that one. I hope I have tried to answer the question on that issue of withholding tax. Yes? No, for KPLC is a VAT issue. I name maybe Madam Akamba will answer. It's not a withholding tax on income. This is on withholding VAT that you need to withhold and pay within 5 working days. That's the law. So that is the law. If it's a supply, let's use the word. If it's a supply that is abatable, then you need to withhold and pay within 5 working days.
Hi. Mine. Oh.
Yeah, just stand there.
It's just a request. You know, tax is also supposed to be convenient. It's not just paying. So if you are paying withholding VAT every week, withholding tax every week, then you appear disorganized, office-wise, even to the accountants. So what I request is that since you are policy people, you can also talk to the lawmakers to make payday to be 30th of every month, so that you need that withholding tax by 5th of the following month. That will make a difference. Because we want to compute everything the whole month, see what has exceeded 24,000, then we give you 5 days after the expiry of any month. That will make sense. And on the issue of withholding VAT, it's possible, yes, we can submit every 5 days. But what happens is that when you have so many suppliers and money doesn't come in easily to pay creditors, you pay creditors almost on a daily basis, depending on pressure. Maybe there are some goods you need, you have to settle this, so you are paying daily. So each day, some transactions are expiring the 5 days you are referring to. So to us, we have made it like on Mondays, we are remitting withholding VAT. But then it's not so much of a big problem as it is on withholding tax. But from your explanation, maybe we can understand. Thank you.
Thank you. Thank you. Now, I think you are talking also like a taxman. You understand where we are, and I really appreciate your comments. On the issue of tax convenience, what I want to say is that the law used to be, you remember the way the law used to be by 20th of the following month before it was changed in 2023? That's where we are now. We are dealing with 5 working days. That's the law we have now. In case anything changes in the future, I guess it will be really convenient, the way it did for those who are dealing with alcohol. I know alcohol was supposed to pay it within 24 hours. So now they are paying on 5th of the following month. So maybe some things can change in the policy, but I take your comments. I understand where the challenge is coming because you have to pay. It's like every day is a due date for you guys. So, and I understand. And it's good you have structured your process in that you do it on a monthly, you do it on every Monday. That's something I would have said that maybe you would see something like that. You plan your affairs in a way that it doesn't really inconvenience you, but just find a day or two within a week, then you pay. But I think we'll look into that issue going into the future. So we hope that can address the issue in the future. We don't know how the policy will change, but we hope something may come up and it will really be convenient to you guys. Thank you.
Hello, my concern is on 2 areas where maybe I would need advice. Number one, there are a lot of agency fees that manufacturers face. For example, I know Kenya Bureau of Standards, there's also another 0.2% that you pay service fee. I only wish that it would be possible that there could be a way that if it's KRA that is mandated to collect tax, please collect the taxes and save us this headache of I'm dealing with you. I know I've paid something with KRA and someone comes from KEPS and they also now want another money from my turnover. So that means I end up having less and less. The second one is on the issue of people that we get inputs from. A number of them are not even vertable. I work with smallholder farmers. I can tell you one of the biggest headaches I have is when you tell an old mama who have brought you her sorghum or finger millet that, now, Kujana, I want to put you through the KRA system. Actually, the feeling down there is so bad that some of them just keep off. So issues of sourcing from, I don't know how, they are Kenyans, yes, but they are not within your tax bracket. How would you advise us to handle that? Because I think as Madam Wanja put it, if I've not put it through eTIMS, then I should not claim it. So how do I handle that? And yet they're the ones who give me my raw materials. Thank you.
I think the first one, I can take it as a comment because on agency fees, I know you would wish KRA to collect, even when I'm sitting here, I would wish to collect everything for government. I would wish to collect everything for government as KRA, but that's not possible because of the issues that are there in terms of policy, in terms of legislation. But what I can say is that we will look, maybe one day we'll have this forum to discuss some of these issues, but it's a welcome comment, which is a compliment. Next time nikipata forum ingine ya kuambia, I'll give the same sentiments you are having to them as well. But the ones we've tried to collect within our purview, I think we have done better in a way, and I can say that. On issues, I think Madam Akamba tried to clarify on issues where you have these small scale farmers who are supplying to you, where you need to do what you call buyer-initiated kind of an approach, where eTIMS allows you that instead of them generating the eTIMS themselves, please generate on their behalf. But the issue is, they may not, I don't know, that's something maybe you can discuss with Madam Akamba. I understand your issue, because you can only help them. The problem again is that if you don't do that, one, you don't get, maybe you may not get, you may still continue and get supplies from them. You will not claim input VAT. Okay, kuja kwa income tax, you will not be allowed that expense. It's really bad that way. I know how it can really demoralize you, because under income tax, it doesn't allow anything that is not eTIMS generated. So when you're claiming for purposes of corporation income tax. So you will even pay 30% on something that you really acquired legitimately. Sini kweli? Lakini law ni nini? Ni kama specs. You have to see something. If it's an animal, it's an animal. It's not something else. Sawa sawa. If it's a vehicle, it's a vehicle. Sawa sawa. That's how we look at it. Sawa sawa. And I understand where you're coming in, but do I say my sympathies or my empathies? But that's how the law is. Sawa sawa. Yes. And we try, that's why we try to simplify everything using the system to make everything easy in a way. Baka USSD. I think Madam has even given something going to very simplified fashion of eTIMS to try and help us sort all these problems. So we are not there. We are going pole pale tutafika.
Okay. Thank you. I think this question has just come up after she mentioned that problem where she had to pay, or their company had to pay. And we've offered two solutions where either one, you don't pay if you know you're not due to pay and launch an appeal, and the second one is pay while protest. Now I'm just wondering where, if I'm pretty sure she's not the only company that they paid where they were not supposed to pay. So I'm wondering, is there a branch in KRA for remedies, especially where you've overpaid and you didn't even know you overpaid, because that means KRA owes these people money.
Is it on the customs issue?
No, like any issue, like if
Overpaid.
if something like a template wasn't updated and someone had to pay and they didn't know, and things like that.
No, our law allows actually when you have paid and overpaid. That's why we have laws on overpaid taxes, which you can claim a refund actually as one of the issues. Then secondly is that they are also our laws allow where you pay tax in error. So which means you can demonstrate that this tax was paid in error. Then you can still claim on a refund. You just go through the same process as well. It is there. The law allows us that if you pay tax in error or you've overpaid your tax, which you should have actually paid that tax, then there's a process for refund to get that one. The law is there. The law is there to allow that. Sawa sawa. Thank you so much. You know, no one clapped for me when I was here. Thank you.
Thank you very much. I know maswali haziwezi isha. There are so many, but we have an opportunity to network after this. We'll have lunch, and you can ask any other questions that you may have. We are having a slight change of the program. We want to hand over the program back to CAM, but before we do that, we'll have our Director Emeritus, Larry Liza, give a vote of thanks on behalf of KRA, and then we Asanteni.
Good afternoon. Somebody told me when I was coming here, one of my close friends, and I told him that I'm coming to give a vote of thanks in this meeting. And he told me, unakwanga na umama mingi sana. And I looked at him and I said, behind every successful woman, there is a man who has frustrated them in many ways, and you come out strongly as one of those. I know you sit here as a majority of women, and you have gone through a lot of frustrations in business. We listened to you this morning, we're listening to you this afternoon, and we are you. And we also are in other issues that we do, and we also go through some of these problems that you go through as challenges, even us being in KRA. A couple of months ago when we were filing returns, Kenyans complained about new taxes that you'd suddenly see that came to your accounts. You remember them? And even as staff of KRA also received them, including me. And for one reason or another, these have not been completely solved. But why we are here today is to listen to you more and more. And that's why nobody has been stopped from asking questions. Nobody has been told you cannot do this, you cannot ask. So on behalf of the KRA management, and particularly the Commissioner for Customs, she asks us to say thank you. Thank you for being here. Thank you for asking us tough questions. Thank you for paying your taxes. The fact that you are here means you are willing to do your bit, not just for your business, but for the entirety of this country, and to leave a legacy for your children and your children's children. The message for us as we say thank you today is to let you know that in KRA we are not perfect. We are not perfect yet. The reason I've been called Director Emeritus is that for 15 years I was serving at the World Customs Organization, and I have just come back to KRA. And having worked in 24 countries in East and Southern Africa, I need you to know that when we assess the entire Africa, Kenya and KRA in particular is among the top 5 in customer service and in everything we do. So you can imagine the country that is number 51. There are still countries that are so manual. There are still countries that are struggling even at the border. Somebody takes your passport as a female trader and goes to stamp it, and you won't get it until you pay $100. Not very far from here. So the issue for us as KRA is to continually improve. I keep saying the Japanese have a saying or a phrase called Kaizen, which means continual improvement. And as an ISO certified institution, our assurance to you is that the Kaizen spirit continues to dwell, and we can only make it with you and with your help. We simply, we sympathize with those who have struggled, those who, like the mama from Kisumu, Mosahinya, who have struggled, the many of you who are frustrated when you go online. But we want you to know that KRA, in its 9th corporate plan that is now running, has customer as one of its key areas, even being given much attention beyond revenue. And the 3 key areas we are looking at here is simplification of taxation. And this is why we are simplifying. It's amazing when Wanja talked about SSD, and I shared in a group, and people are like, hiya, why do I always have to ask someone to remind me my PIN or to remind me this? So the issue is whether you have a Mulika Muizi or not, KRA is consistently and incessantly improving. Somebody referred to the queues that were here years ago. There are still countries that are making those queues. But at the same time, there are still countries that people don't really file their returns. They just go to confirm what has been populated for them, even one who has 10 businesses, and they can They can complain, they can point out, but 90% of the time they are telling. If you had news about a month ago, it was said by KRA that if you only have income from one particular place, the next year as you file your returns or in future, you'll only be confirming because it will be pre-populated. So I want you to know this afternoon that at KRA, we are committed to simplification. Another one is taxpayer engagement, and that is why we are here to engage you, not just as our clients, as our taxpayers, but as our partners. And we truly, truly are grateful to come for leading the way in this regard. We are more than ever open. I see that in the KRA leadership. We in KRA are just, the staff we are just passing, you know, and KRA will remain here. So some of us have come and taken KRA as our organization. You know, that's why unasikia KRA si ya mama yako, si ya baba yako, but we will all live. Maybe 10 years from now, I won't be in this organization and your children will be serving here. My hope and prayer is that we take the issue of taxation seriously and do our best to give us feedback. If we are asking for bribes, say it. You know, say it, say it, say it. We are asking for bribes, but not all of us ask for bribes. There are many KRA officers who are dedicated to making this nation a better place. And with people like you helping us and coming through for us, we are persuaded that we'll continue to leave marks of excellence in everything that we do. And our key third area in that regard is trade facilitation. That's why we continue to look at issues that are affecting traders. Women in business and cross-border women traders are some of the most disadvantaged. We are happy in customs that we are led by a lady. We look forward to a time the authority will also be led by a lady. I have nothing against the current leadership. I love them, I respect them, I honor them, but I've always seen continually that there is more and more and more that happen when you have people who have that additional heart of understanding. And only yesterday, the board appointed yet another female commissioner in the name of Nancy Ngetich as the commissioner for shared services. The issue for me is women are continuing to rise. Many of us over the years have sat back wanting the women to be at the deputies, and you leave them there at the deputies and suddenly there will be just be that overflow. So let's keep working hard, let's keep on keeping, tuzidi kupiga moyo konde. Know that at KRA we are here to stand with you, to fall with you, to carry you, to move together. We are not perfect, but the spirit of Kaizen continues to reign in us. So be assured that we are you and he is she. Thank you very much.
Ndio hiyo sasa, mmesikia commitment ya KRA. I cannot add anything. So at this point, I would like to hand over the meeting back to Cam, and we will have Madam Jane. Madam Jane, your second name is so hard. Sitaki kuattempt. Nitangoa. So tafadhali, come and give us the way forward.
Good afternoon, everyone. I know I stand between you and lunch, and therefore anything more than 5 minutes will not even be welcome. But I want to sincerely stand here on behalf of KM and on behalf of the leadership of the women in manufacturing to say we are really grateful for the time we have been given by Kenya Revenue Authority. And I think for the many years KM has engaged with KRA, this must be one of the longest meetings that we have had. Mariam can correct me if I'm wrong, but I think this is one of the longest meetings that we have had, and we have seen a lot of engagement from the ladies and gentlemen today. I think when we started, the gentlemen were quite active, but as we have finished, we have seen a very good balance in the questions that are coming forward. So we want to thank each one of you for the effort and for the time you have taken to be with us, to ask very deep questions, which give thought maybe to the advocacy teams on what we can put forward now that we are starting the next cycle for collecting your input on what we can put in our budget proposals, because those proposals are the ones that largely formulate the finance acts that we see. So some are taken, some may not be taken, but at least the information is put forward that as manufacturers, these are the areas we'd like to see change, and we even give proposals of how the change needs to look like. So my encouragement to each one of you is, as we start reaching out, asking for your proposals, let's put these things in our proposals so that we can enrich the tax system jointly. Number two is to say that this is our first fireside chat with Kenya Revenue Authority, and I don't know that I'm the only one, but I think many of us have derived a lot of value from today's engagement, and we look forward to having additional engagements. And maybe as we go forward, this subject that is called tax will not be looking like a very complicated subject that gives a lot of us a lot of administrative time in the office, but it will be something now that makes sense, that is responding to the needs of businesses, and that we can see the growth of the company, we can see efficiencies within the company, and reduced complaints on the amount of administrative time it takes to resolve KRA related issues. So in finishing, I just want to say asante sana to the leadership of KRA, and leadership, as we have seen, led by Dr. Lilian Nyawanda, and all the chief managers that have been with us, and they have stayed through to respond to all our questions. We don't take it for granted. That is really a lot of prime hours given to us, considering that many other things are still waiting for you in the office. We also want to thank everybody who traveled from far and wide, including the lady who has come from very far just to get her issues attended to. But I'm sure going forward, I know we've always said we'd like to see Kenya Revenue Services rather than Kenya Revenue Authority. But our gratitude is in seeing that one of your pillars is trade facilitation, and I think that talks to the services that you'll be giving business people, including manufacturers. So asanteni sana. I know we'll meet again with the ladies who are in manufacturing, because I know next Friday we still have another engagement just to learn from one of the seasoned manufacturers. I know we'll be going to Africa Originals, and I invite each one of you to join us so that we can also learn from those who have gone ahead of us, who have learned a few things that we can learn from them. And with time, we can be able to say the contribution from women in manufacturing to the GDP has grown and is significant, and women can stand to be counted as great manufacturers of this country. So thank you very much, and we look forward to similar engagements in the future. Asante sana.
Thank you, Madam Jane. May I also propose that when you're having meetings, CAM meetings, if you can also invite us. Yeah, we don't have to organize a forum like this one. You're just having your own meeting, just invite us. Somebody will come.
I think we cannot say no to such a request, yeah? So we'll invite you. We have seen the value, and we know you'll even give us more value wherever we shall be with our next meeting. Thank you.
Hata huko mashinani, tutakuja Rongo, tutakuja Kisumu. We have offices everywhere, and so we will come where you are, because we want to be a service. And as Wanja also said, we are moving from having stations to being stationless, so you'll be able to be served from anywhere. Okay, tumeridhika? We are happy. At least kidogo happy. Very happy. Okay, sawa sawa. Again, we will proceed this way. I'd like this team here to leave first, and then now we'll follow them. Please pick a voucher, a lunch voucher at the entrance. The ladies there have lunch vouchers, and then you proceed to the second floor. Eat something. Hatutaki uende uko Town. Sindio? Tukule something, and then now you're free to leave. We can say a prayer. We can say a prayer before we leave. Haya. Let us pray. Heavenly Father, we are so grateful for this opportunity that we have had to create meaningful partnership. And we pray, Father, that going forward you will walk before us and you will enable us to create an even greater partnership and to resolve all our issues so that we can build this nation together. We thank you for lunch. We ask that you bless it, may it be useful to our bodies, give us strength to serve and to love you. In Jesus' name we do pray and believe. Amen. Asanteni sana.